Please take your seats. The program is about to begin. Please take your seats. The program is about to begin. Please welcome back to the stage Bloomberg's Jason Kelly.
That is like sleepy lunchtime applause. I don't like it. Thank you. Thank you. You're going to have a lot more interesting things to clap for than my continually bald presence in front of you. But we are going to have a really good end of the day. I hope everyone had a great lunch, refueled, ready to go. Just a quick reminder, if you've just joined us, a couple housekeeping things. I want to once again acknowledge our title sponsor, Invesco QQQ. Also, to connect to the Wi-Fi, please find the info at the top of your badges. You can scan the QR code on the screen right here to join the conversation, ask questions, follow the program agenda throughout the day. And you can also, since you're on Wi-Fi, engage with us on social media. The hashtag is Power Players. And finally, feel free to claim your three-month free trial at Bloomberg.com by scanning the QR code on the screen. You've heard from some of my amazing colleagues on the Bloomberg Sports team today. You can get that newsletter as part of your subscription. So just zap that QR code. All right, we've got some big sessions coming up. We talked a lot about basketball, tennis this morning. We're going to move on to golf, the NFL, the NHL, and also, obviously, the biggest game in the world coming right here to North America next year, the FIFA World Cup. So we're going to get a preview of that with the commissioner of the MLS and the head of U.S. Soccer. And of course, for the finale, you're really tired of me talking about this. A-Rod will be here. He's backstage. We're getting ready, and we're going to do a live taping of our show, The Deal, with Justin Tuck. But first, we want to set the stage in a very Bloomberg way. We love data. We love to sort of give you a sense of what's happening in the world. And we have two amazing colleagues here to present their research to really, again, set the stage for the rest of the day. Please help me welcome Damian Sassower and Brianne Doherty. Come on up, guys.
Well, I hope everyone had a nice lunch break. Today, we hope to shine some light on an industry that touches billions of individuals each and every day, an industry that is cash-rich and resource-hungry, an industry that today commands the most sophisticated and institutional investors worldwide. I'm talking Avenue to Ares. I'm talking Apollo to Silver Lake. Good afternoon. My name is Damian Sassower, and I am a co-anchor and producer for Bloomberg Business of Sports, our flagship radio property. And I am also the Chief Emerging Market Fixed Income Strategist for Bloomberg Intelligence, the firm's proprietary independent research arm with 350 analysts and strategists worldwide that will tell you everything you need to know about the financial markets. And I am joined by my esteemed colleague, Brianne Doherty. who's our head of thematic investments. And today we hope to give you a very quick walkthrough of the way we look at the global sports industry, its size, its revenue generating capacity, and its ability to offer a diverse set of investment opportunities for all shapes and sizes. The global sports industry is expected to generate $2.65 trillion in this year in 2025. That's $2.65 trillion. That makes it much larger than worldwide tourism. And it puts it on par with other industries such as insurance and autos, although as we know, those industries have a ton of publicly listed equities from Ford to Aetna, you name it. But for some reason, the sports industry is an asset class that has remained limited in access to both institutional and retail investors alike. It's an asset class that generates $60 billion a year from media rights deals, comprises roughly a quarter of all media content spending worldwide, an asset class that continues to evolve, evidenced by the enormous revenue being generated from such industries as sports betting and esports. So let's drill down. As mentioned previously, the global sports industry is expected to generate $2.65 trillion in 2025, yet it's a market that encompasses everything from media rights to gate receipts, advertising to apparel, footwear, and recreational vehicles. Yet, in short, sports is a massive industry, not only in terms of size, but in the diversity of its revenue streams and its earnings growth. In today's presentation, we're going to focus exclusively on fan engagement. $750.3 billion. It's an area that includes sporting events, media and advertising, and by way of products, just to give you a sense, sport products includes footwear, includes apparel, sports medicine, recreational vehicles. Sports participation covers youth sports, it covers fitness, it covers outdoor recreation, camping, hiking. We cover all of it here at Bloomberg Intelligence. And although smaller in size than the other two segments, we're going to focus exclusively on fan engagement in today's presentation. Now, it should come as no surprise that the professional sports franchise that's best positioned to capitalize on increased fan engagement is a professional sports team itself. And from that perspective, there's no sports league quite like the NFL, despite the New York Jets' best efforts over the past decade. So on the upper right, what you're going to see is Sportico's most valuable sports franchise valuations as of the end of the fourth quarter of 2024. And as you can see, the NFL features prominently, very prominently. But my goodness, we've seen some big deals this year. Private equity has come in and changed the game. The Bills, the Eagles, the Dolphins, the Niners. And we basically updated those Sportico valuations with a lot of that data here at BI. And my goodness, you can see on the left now, it is dominated by the NFL. I mean, we have lost professional soccer. I'm talking EPL teams, and we've also lost quite a bit of baseball, and for that matter, the NBA as well. There's only 2 NBA teams in the top 25, whereas just at the beginning of this year, there were 5. What we like to do when we drill down into how to value a sports franchise is we look at value to revenue, right? And so basically from that perspective, VTR multiples, it's the NBA actually right now, based on recent valuations, that is trading at the highest VTR. But it doesn't really mean that much because they just signed this huge new media deal, which doesn't go into effect for another year. And so once that hits, you're probably going to see that come down. And again, you're going to see the NFL really return to the forefront at that. But underneath the hood, what drives revenues for each sports franchise? Well, here you have it, right? It's really national media rights, but it's also gate receipts in blue as well. And I think from that perspective, we have to take a step back and say, look at the NFL. I mean, they are generating upwards of 70% of each team's revenue from national media, whereas if you look at Major League Baseball, it's largely gate receipts. I mean, here we see that national media spend, the global value of sports media rights over time, and while it's expected to dip a bit this year, it will continue climbing as new deals such as the $76 billion 11-year deal from the NBA, the $2.4 billion 3-year deal from Major League Baseball, and obviously some of these new deals from F1 and UFC come to the forefront. Again, it's the NFL's world and we're all just living in it, right? I mean, so indeed, streamers are the real catalyst for why you're seeing media rights average annual value just surging over the better part of the last few years. It's these cash-rich tech companies. We all know who they are. It's Apple, it's Amazon, it's Netflix, bidding against traditional players such as CBS, NBC, Turner, et cetera. And as you can see in green, soccer generates $19 billion annually. It's still the sport that generates the highest in terms of media rights, but again, it's the NFL's world, and we're all just living in it. Here, what we're looking at are gate receipts. I mean, it's the other primary revenue driver, and quite frankly, it generates anywhere from 20 to 60% of revenue, depending upon which professional sports league you're looking at. So, Major League Baseball, obviously, 162 game schedule. They're at the forefront of this, but there are a lot of other drivers, and there's a lot of additional alpha to be extracted by franchises, sports teams who are able to increase revenue from this line. In fact, here's how they do it, right? It's premium seating, it's luxury. It's one of the key strategies used by team owners to increase gate receipts, the rollout of, luxury boxes for high-end consumers. One such example is SoFi Stadium in Los Angeles, which cost the Los Angeles Rams ownership $6 billion to build. But if you can just look here, it's somewhere in the middle there. It's roughly 26% of 26% of its capacity is luxury boxes and premium seating, and that compares, very favorably to Arrowhead and Lumen Field, which I believe are roughly 12%. Now, looking ahead, we here at BI see tremendous potential for, stadium build out and for stadium renovations. We think that's a huge area of growth, especially as events like the World Cup and the Olympics are coming to town, and I guess that's really, it from my side. We basically spent a lot of time focusing on what are largely private investments within the global sports industry. I'm going to pass it along to my colleague, Bree, who's going to draw the link from private to public. Bree, over to you.
Perfect. Thanks. At the end of the day, live sports, one of the few real-time viewing opportunities where streamers, networks can really get people to tune in live. So again, driving the escalation in those media rights. But I want to focus on something here. We're going to talk in a little about the private markets. Nearly $100 billion invested into marquee team and marquee leagues since 2018. Just since 2018, $100 billion. You can look at this right there, and you're going to see it all the way from the NBA to the Premier League to NASCAR to MLB to hardest trophy to win in professional sports, the NHL. We could talk about it later. I'm Canadian. I'm a little biased. But we're seeing all those teams, we're seeing all those leagues engage with this $100 billion. In 2025 alone, 18 deals inked thus far. Obviously, the big trend that we've seen over the last 5 years in particular has been the rise of the US deal, right? And that comes off the fact that since 2019, one by one, the leagues have actually opened up themselves to institutional investors. That has changed the playing field, right? It's increased liquidity of the asset class, and it's entirely reconfigured the way these marquee teams and marquee leagues are actually looking forward as far as the growth through the long term. As we move on, it's not just for high net worth individuals, it's not just for these big companies leaning in on these private sports teams, but rather it's also fully accessible in the public markets. A lot of people don't think about this. I'm head of thematic strategy. We cover thematic investing. 33 themes, AI to energy themes, to electric vehicles, to autonomous vehicles. One of them is sports. I'm going to run you through some numbers. Equal weight, 89 stocks, 40% weighted to the US, 18% Europe, 41% APAC. That APAC weighting, largely esports. 3 exposures: traditional sports or sports, which includes sports teams like Atlanta Braves, Manchester United. It also includes the likes of Paramount, $7.7 billion UFC media rights deal off the back of that, MSG, Disney, esports. We got Nintendo, Konami, Roblox, betting, Flutter, Evoke, DraftKings, running out of breath. 27% year-to-date return. So it does well. But the companies that are ranking on earnings growth and revenue, it's been predominantly driven by sports thus far over the last 5 years. When we look to where things are going, look at this. Esports, sports betting, they're expanding the ecosystem. The earnings growth potential of those 2 exposure categories outrank that of sports. So when we look to where this next leg of the ecosystem is going, we're really looking to that esports and sports betting expansion. How are they doing it? Some of you might know the esports Saudi Cup, same prize pool roughly as the Wimbledon. So that just puts everything a little bit on the global scale. Big deals have been happening, so they're doing it by changing regulations. That's been a big catalyst, right? But then we also through M&A and partnerships. This just gives you a little bit of taste across that. The potential for the US courts and CFTC to allow sports event contracts and powerful combination of this M&A and partnerships is really propelling the esports forward. Bottom line, I want to give you some stats to back it up. We all like stats. Our market cap weighted index, BSPAT, you can look it up, beats the SPX, so the S&P 500, 31%. It beats by 31 percentage points on 1 year, 84 percentage points on 3 year. And I'm going to pass it off to Damien because I'm pretty sure he's got some other stats that he wants to share as well.
Sure. So, before closing, I just want to take this opportunity to show you a list of some of the most recent sales over the better part of the 3 years, outright sales of professional sports franchises. Now, in the second to last column at the right, what you'll find is that the return on investment generated over the life of each investment. When you compare it to the last column, which is the return on the S&P, what you're going to find is that in almost every single instance, 11 of 12, you had a major margin of outperformance for, the team ownership, right, relative to the S&P. There's one standout transaction at this list above. It's the fifth from the top. It's when the Rubenstein Investment Group bought the Baltimore Orioles, and if you'll find, they purchased them for, an amount that you would argue would be relatively cheap relative to the performance of the S&P. So what that means is private equity does work. They can make some smarter, maybe more educated investments and potentially extract a better valuation for your franchise. And from my vantage point, David Rubenstein knows his way around a negotiating table. So from that perspective, thank you all for your time and attention here today. Keep well, stay safe, and keep moving forward.
Please welcome to the stage Derek Sprague, CEO of the PGA of America, for a conversation with Bloomberg's Julie Fine.
I'm in three.
It'll be okay. Derek, thanks so much for coming all the way from Texas and being with us here today. We're in a big moment for golf right now. A lot of you golfers, a lot of you will be heading out to Bethpage Black for the Ryder Cup. Looking at golf now, you've got 18 to 34-year-olds playing like they've never played before. Women, that demographic growing exponentially. So how do you capitalize on this moment in golf?
Well, I think with all the programs that the PGA of America does, helps with the retention in the game, helps with the growth of the game. Since the pandemic, when we haven't used the word social distancing in a long time, but where you could get families together, playing the game together, and we've seen this multi-generational growth, getting the parents and grandparents, getting the younger generation into the game. So we've seen that explosion. We have more golfers today than we've ever had in the game. Close to 28 million people in this country are playing the game. 550 million rounds of golf were played last year.
And all eyes, of course, will be on the Ryder Cup and Bethpage Black. This really gives you a good opportunity to show what you can do at the PGA of America. PGA America, of course, that represents the teaching golf professionals. You are in charge of the Ryder Cup. You own and operate it. You own and operate PGA championships as well. So talk about how you can really expand your global footprint in a somewhat divided golf world.
Right, well, again, the difference between the PGA Tour and the PGA of America is we own majors on every tour. We have a KPMG Women's PGA Championship, the Senior PGA Championship, the PGA Championship for the men, and of course the Ryder Cup being played sort of in the backyard here of New York City. So really, when you look at that, and the Ryder Cup really is the global event, if you will, with Europe against the Americans here. And that really, when we look at the economic impact that the Ryder Cup will be this year, we have 260 corporate partners. 30 of those are global from around the world, where you normally don't see that at any of the other championships.
And you've been to 9 of them, 9
Right.
Ryder Cups. So can you talk a little bit about that, how you're seeing more of that global footprint there?
Well, I think, when you look at the European team that was just announced on Monday, we see those faces every week, playing the regular tour. We see them in our majors. And of course, we'll see them at the Ryder Cup. So, yeah, exactly. Those, the global impact of those players playing around the globe, it just helps grow the game globally.
And economically, what do you expect to see, especially in this area?
Well, I think, this will generate close to $200 million economic impact just in this 1 week here. They're building a small city at a Bethpage Black there. And this is an incredible stat. We had 500,000 people pre-register to get tickets for the Ryder Cup. Just to show you the unprecedented demand for this event. We had over 30,000 people apply to be a volunteer at this year's Ryder Cup. And we put, close to 4,000 people to work building this small city out there. So it's a huge economic impact. Golf is a $102 billion a year industry, and the PGA of America is doing its part, especially with the Ryder Cup.
I want to talk economically about the changes that you've seen. Again, you've done 9 Ryder Cups up until now. I want to talk about how the differences you've seen in terms of what people are willing to spend, the global aspect of the entire thing and the fan experience.
Well, I think corporate America and fans alike love live sporting events. That's what we're sort of in the business with our 4 spectator championships. And the corporate environment, their clients and their employees want to have those, sort of experiences that you can't find anywhere else. Attending a Ryder Cup, attending a PGA Championship, one of our majors, really provides an experience for those corporate partners and their clientele. So we're on the right path. It's been booming. I've been involved for a number of years now, as you mentioned, and the product has changed a little bit. We have triple deckers, so we have 3-story high tents and out of Bethpage and 2-story venues there as well. 74,000 square feet of retail. I mean, it's really an incredible city that they're building out there.
We frequently talked about the changes that you see in the game of golf. Largely the biggest one, of course, is the LIV Tour. Now, while your tour is different than the tour that represents the elite pros, what do you see the trajectory of this?
Well, I think it's, again, we're 2 different organizations. The PGA of America has allowed the LIV players to play in our major championships in the Ryder Cup. And we have Bryson DeChambeau as a LIV member. We'll be playing on our American team this year. But yeah, I think it's shed a lot of light on the elite sport in the game, and I think that's helped put a lot of eyeballs on golf. I think it's helping the retention rate, and certainly these pros have benefited for large purses. That has put some focus on the associations and the PGA Tour and the partners, the corporate partners coming up with these large purses. So, but I think again overall it's great to include the LIV players in our championships, because the golf consumer wants to see the best players in the world, and they can do that at the PGA Championship and this year's Ryder Cup.
So in that aspect, you're seeing them play together in certain tournaments, and the bigger names of golf are in both. Eventually, do you think that they merge? If you had to pull your crystal ball out, where do you see this going?
Yeah, I mean, that'd be more of a question for the tour, but I think it's too early to tell. I mean, there's been a lot of chatter that there probably won't be any reconciliation, but I think that's okay. I think now we got a new CEO at the PGA Tour that I've already met, Brian Rolap, and he's my counterpart, and we've already been talking about ways to make sure that we strengthen the game at the elite level. So it'll be good to work with him.
Golf has gotten more popular of late because you see younger players. They're taking a more casual approach to this. You see them on the social media. Now, you represent tour pros from across the country, many that have been in the game for a really long time. So how do you marry the more traditional base and what we're seeing right now in the change?
Well, again, like I said earlier, I think, the pandemic did a lot for people to take up the game. There wasn't a lot going on. Golf was viewed as a safe sport. The PGA of America actually did a lot of work with the White House to get golf to be able to be played during that time. And I think we're seeing the fruits of that labor of getting those people to play. And that young demographic, I think most business executives would say when they get attached to something, they're all in. It's not like they're just going to flirt with a sport for a couple days or a couple weeks. When they're all in and they make the decision to play our sport, golf, they're all in. And our PGA professionals are the best in coaching. They're teaching them how to play the game better, whether it's individual lessons or group lessons. And then we have great programs like PGA Junior League. We'll have some PGA Junior Leagues out there in the uniforms at the Ryder Cup. And some of the Ryder Cup team, how cool is this? Like Cam Young and Scotty Scheffler, they played on the Junior Ryder Cup team, which will also play on the Thursday out at Bethpage, just the future stars. So again, that 18 to 34 demographic, the best players in the world, if you look at our team this year, they're in that demographic. They're playing at a high level, and then the consumers are taking up the game. They see them, and they want to play just like them, and the PGA coaches can help them.
When you see that younger demographic and you see the technology, you see AI available. I was at the PGA headquarters right outside of Dallas in Frisco. The technology there can knock your socks off. Talk about how that will change the game.
Yeah, I mean, at our PGA headquarters in Frisco, Texas, we have all the latest and greatest technology because we train all our future PGA members and professionals. So we have to provide the latest and greatest. And we have an innovation person on our team that is always looking. Every week we're getting 2 or 3 pitches to say, hey, here's our new innovative stuff, a lot of it with AI now. And whether it's launch monitors or technology to improve your putting stroke, it's all starting to be infused with AI. So we're staying on top of that. We're making sure that we're training our associates with the state-of-the-art technology. As you saw, we have like 7 simulators out there, agnostic, not with any one particular company, because when they graduate from there, they got to be able to work with it all, and then we got all our putting labs there. So it's really preparing our PGA members at our headquarters in Frisco. And you're right, artificial intelligence is going to be part of our game going forward. Our PGA professionals probably be using their smartphones to track your shots and speed and spin rates and all that. So it's coming down the pipe fast.
How do you think technology is really changing the game?
Well, I think, this younger generation, a lot of them played video games and they love technology. And I think, I've heard so many times where people say, well, I played golf, in my living room, but now I'm playing on the golf course. And I think it's transitioning over. They love the gadgets and it just gets them to consume the game so much. And I see so many people now, you're wearing yardage rangefinders on your wrist, how far away am I to the hole and stuff like that. So technology really, I think, has helped retain golfers and sort of made it cool for them to be part of the game. It's not your traditional sport anymore. It's more of a fun and technology-infused sport.
When you look at the game of golf and the media landscape now, there's so many different ways to consume any type of sport that you really want to see. And you're seeing with certain teams, they have their own network now. What is the future of that with the game of golf?
Yeah, I think, that's what makes the Ryder Cup so unique as a team sport. And then we've seen at the college level, and then you go all the way down to our PGA Junior League. We have 77,000 juniors playing team sports. And it's a great way for them to get in the sport. They feel like it's a little bit of a safe environment. They got their friends along for the ride, and they got their jerseys on, and they got a little bit of that security blanket with them. And they're playing in a fun and social setting. It does get competitive, and I think, I said when we purchased PGA Junior League back in 2015, I said it's not going to be too long before we're going to see people playing the Ryder Cup on the Ryder Cup team that played in a PGA Junior League team. We've already seen them go from junior Ryder Cup to the real Ryder Cup. It won't be a few more years probably before we'll see junior leaguers that play there. But yeah, team sports it helps grow the sport. We play, this sport is played with foursomes, generally speaking. So again, to have that social nature is something fun to do. And we talked about technology, but I think one of the beauties of the sport is getting away from that technology, maybe for a period of time, to just get out there in the beautiful environment, enjoy the views and the golf courses, and get away from the office and technology for a little bit.
Well, when you look at the technology, when you see, obviously you can see in your office, I assure you, you can see everything right and wrong with your swing. But is there also a time where you got to get out on the course and really look at your game?
Yeah, absolutely. And that's what's neat about PGA Frisco and our headquarters there, when our partnerships with the Omni Hotel Group, and we have 2 amazing golf courses. We have our 27 PGA Championship coming up there. We had our women's and our senior PGA already there in 23 and 25. So we literally have a golf course out our back door. So these associates come in and train. We have 300 employees that love the game of golf as well, and they can literally go out, they can hit balls on the driving range right out our doors, or they can go play a couple championship golf courses. We got a short course right there, and we got a 2-acre putting green. All the short course and the putting green are lit, and just adds to the fun of the sport.
Do you see a world where golf more broadly embraces rule changes or different formats? Like you see things like the match, and they're playing at night. Do you see shorter rounds, more sim-based content?
Yeah, I think, what is golf, right? And if you, sort of the National Golf Foundation is our research arm for the industry. And it used to be, well, we're just going to count 18-hole rounds. But if you play 9 holes, is that a round of golf? If you play a short course, like called the Swing at PGA Frisco, we have our finance group every day goes out from noon to 1:15 and plays the quick 10-hole loop. Is that golf? Absolutely. So I think these varied forms of golf, whether it's on course or then at sites like Top Golf where it's off course. I think all of that is part of the sport and part of the lure of it. And I think you're seeing people go from their couch and video games to maybe these Top Golf venues to on course, whether it's short course, 9 holes or 18 holes. So yeah, it's all golf, and we're helping develop all that in many aspects.
In an era where we are seeing more and more private equity in sports, what kind of pools do you think golf should be looking at to increase revenue?
Well, I think, certainly with great assets like the Ryder Cup and PGA Championship and our other majors, the seniors and the women's, private equity is getting in all types of sports right now. SSG just got involved with the PGA Tour a little over a year ago. And so because golf and the demographic that it represents in the world, like I said, is a $102 billion industry. So private equity is looking to see how they can get in that industry as well. So I'm sure that's why SSG got in with the PGA Tour, and these other private equity companies are getting involved with other sports to sort of see how they can grow those products and improve them.
About 3 weeks from now, you'll be at Bethpage Black. But just recently, Keegan Bradley announced his captain's pick for the Ryder Cup team. First of all, were you surprised he wasn't a playing captain?
Personally, I wanted Keegan to play just because I remember watching him in 2012 at Medina. I think he was levitating on the first tee. He was so pumped up, and the adrenaline was palpable. But at the end of the day, what he said at his press conference, what just resonated with me, he said, I signed up to be the captain, and he stuck to his game plan, and I respect the heck out of him for doing that. And I think he's going to have more impact as a captain because he'll be in his cart. He'll be racing around Bethpage Black with all 4 groups. We have 4 matches in the morning, 4 in the afternoon on both Friday and Saturday, then all 12 play on Sunday. So he'll be more impactful as a non-playing captain in my estimation.
One thing that really stuck out to me at that announcement was when he said when he began earlier in his career that he kind of kept to himself. He went home at the end of the day and he viewed everybody out there somewhat like competitors, and how much he's learned from the team watching that group together. And you could certainly tell with the captain's choices that was the case.
Yeah, I think he really showed his vulnerability there, right? That he's really grown as a person, grown as a player. And I thought what was important, and I'm sure the other players on his team and other players around the world took notice, is that, and I think we've seen it in the last couple of years, is that he's played better. So I think he said, geez, I don't need to just go to the office, hit balls, play my round of golf, and race home. He's starting to socialize, starting to talk to the players. He wanted to get to know a lot of the players that he had on his radar, but it's made him a better player and a better person. And I thought that was really, really exciting and interesting to see during the captain's announcement. I think everybody took that away like you did.
10 years from now, what do you see the game of golf looking like, both economically and sports-wise?
Yeah, I see it's going to continue to grow. Just 10 years ago when I was on the board of the PGA, it was an $82 billion industry. Here we are 10 years later, it's 102. I can see that being north of $120, $130 billion industry that we're in. And it'll be interesting on the sports. I think people will continue to love to attend live sporting events. I think you'll see your corporate environments on these small cities that we build will change over time. They'll probably get higher end. At this year's Ryder Cup, we have VVIP experiences where we're going to helicopter people in from the city, and backdoor entrances and stuff. These people want this. There's a lot of wealth in and around live sports, and certainly with golf, and it's helped us shape our corporate hospitality products at our venues.
Before I let you go, I do want to know, you played golf with a lot of people. What is the most unique round you've ever played? Well,
I've been fortunate enough to play with a lot of tour pros, and this will probably be a boring answer, but anytime I can play with my kids, my family, is really a joy. And I can remember walking down the fairway with my son, who was 16 years old at the time, and I said, we can play this sport for another 70 years or so. My grandfather took up the game of golf at age 74, so anybody in the audience out there, it's never too late to take up the sport. But I've had the good fortune to play with great players like Bernard Langer. When you talk about longevity, right? And that guy's in his mid-60s, I think, and can play as good as the best players in the world. And he is so disciplined in his workouts, in his game of golf, but also with his family and his faith and stuff. And I can just remember when I played with him, just in awe, this guy he's like, he's German, so I said, he's just like a German automobile, finely tuned, finely engineered, and he was just a joy to play with, and such a gentleman that I really remember that round of golf with him.
And I can't ask you to pick your favorite course because I know that's challenging, but certainly your most memorable one that everyone here that plays golf or enjoys it should make sure to get to.
Yeah, right here in your backyard, Bethpage Black is just incredible. As Keegan said, our captain, it used to be New York's course as a public park, but it's going to be America's course here in a few weeks. But I've had the good fortune of playing some of the finest private courses in the world. I love playing. I played Cypress Point, hearing the ocean crashing in and the seals barking on the rocks out there was memorable because they have a lot of inland holes as well. So you go from hearing the ocean to very peaceful and then ending near the ocean. That was pretty memorable.
Derek, we really appreciate your time today.
Okay.
Thank you so much.
Thanks, everybody.
Please welcome to the stage Michael Arougheti, co-founder and CEO of the Ares Management Corporation, and Tom Garfinkel, vice chairman and president and CEO of the Miami Dolphins and the Hard Rock Stadium, and managing partner at the Formula One Crypto.com Miami Grand Prix, for a conversation with Bloomberg's Jason Kelly.
All right. Light applause. Light applause. Listen, that's more than I got earlier, so you guys should feel really good. So happy you're here. We have so much to talk about in the world of sports, and as I was thinking about this conversation, I realized both of you cut across so many of the big global sports. Tom is featured in an upcoming series under the Power Players brand, all about the business of Formula One. We got to spend a lot of time together down in Miami. We're going to talk a little bit about F1. That's been something you've invested in over the years, Mike, through Ares. But it is the first day of the NFL season. So let's talk some football. You guys made some big headlines last year, Ares as an investor into the Miami Dolphins under these new rules that the NFL adopted to bring institutional capital in. My main question for you as the recipient of such an investment, Tom, is how's it going? How does how does private equity sort of change? And how's it mine, Tom?
Worst decision, Steve Ross.
Like Ed Koch. How am I doing?
No, it's fantastic. I mean, we couldn't have better partners. I think, obviously the NFL was so diligent in the process of how private equity came into the sport and who was selected to come in and their reasons for coming in. And we couldn't have a better partner in Ares. I'm not just saying that because Mike's sitting here, but the whole team from Ares has been strategic partners, long-term. They've got a long-term view on things, and they're a lot of fun to be with. So it's kind of the best of all worlds.
So why do it? Why go in? What's so great about the NFL?
Well, I
said somewhat sarcastically, but go ahead.
Football is obviously the most watched sport. Huge scarcity value, ever increasing media rights value. The business model of the NFL is probably one of the most durable in all of sports. And so as we think about just investing across the entire sports ecosystem, the NFL kind of checks every box, right? I mean, most other leagues that we've invested in, there's some risk that you have to box, relegation or lack of, national media rights, but the NFL really sits at the top of the top. there was a long process, as Tom hinted at, just to get authorized to invest in the league. We are incredibly proud and humbled by the fact that we were selected in a very small handful of people to do it. And I think a lot of that is just the experience that we brought to the table, but also the respect for just how important it is to be a good long-term oriented partner.
Yeah.
So the Dolphins were our first. I don't know if it'll be our only, but in NFL, the Dolphins are particularly unique as well, given the multitude of assets, stadium, F1, tennis, all the things that surround it. So we thought that it was a really good place to start.
And I want to talk more about that in a second, but one thing that does strike me, Tom, and the three of us have talked about this individually over the past few months, is this idea that, you guys did your deal, the Bills did their deal with Arctos. There have been a couple other minority stake sales, including one reported by Bloomberg yesterday, with the Koch family coming into the New York Giants. Tom, are you surprised there hasn't been more?
No, I think the NFL, ownership of these teams are being very deliberate, very patient in their selection, and given the valuation of the deal that you announced yesterday, Mike's already got a great deal with us. I think some of the owners
reportedly a $10 billion valuation.
I love that. I think the fact that some of the owners are waiting, I think they're expecting values to continue to rise, and I think they're right.
What do you think about valuations? I mean, having done the underwriting here and done all this diligence, where are valuations right now? Where are they going?
Look, when the first investment came into the league at a $5.5 billion valuation, I think people were shocked. The median value in the NFL now is about $7.1 billion. And with every successive investment, you're seeing those values go up. Some of that is the presence of institutional equity. So if you just look at sports team valuations in general, you'll see an inflection. NBA saw it, NHL saw it when institutional capital comes in, because you're dealing with asset scarcity. And when you start to open up new channels for investment, valuations will naturally go up. So I think you're beginning to see that scarcity value thesis play out. And then the media rights, continue to go up. And so sports franchises have compounded at 10 to 15% per year for the last 15 years. And then they get these periodic inflections whenever you up tier the media rights. But I think they'll continue to go up.
And Tom, do you agree? Like, how fast will they go up? I mean, how soon are we going to see a $20 billion team? I mean, I know it's hard to project, but
I think that's going to happen sooner than people expect. Look, I think I look at it maybe more simplistically. I just think that it's fundamentally supply and demand. You've got a lot of demand for these assets. They don't go for sale. There's a scarcity supply of them. The NFL is a fantastic business model. It's also a group of owners that's sort of a club some people want to be in. But from an investment standpoint, Miami, for example, in some of these markets, you get a chance to, host. I mean, we'll have the World Cup, we'll have the national championship game, the Formula One race, the Miami Open tennis tournament, all in the next, in the first 6 months of 2026.
On your campus.
On our campus, and so when you get an opportunity to host, we had, the level of celebrity and power and the people that come to these events, there's meaningful business that's conducted in those environments. There's a lot of different value levers, and I think fundamentally, again, supply and demand, as people who can afford to purchase these teams get more wealthy, the valuation's going to go up, the scarcity's there, and I think for institutional investors, that's part of, I'm not speaking for Mike or Aries, but I think part of the calculus has to be the health of the business model. I mean, the NFL is the most relevant cultural phenomenon in the United States, as evidenced by viewership and everything else. And that's going to continue. So the valuation should continue to go up.
And Mike, you alluded to this, and Tom has too, this notion that you guys are now a global sports investor. I think it's fair to say. Mm-hmm. But that's, I mean, you were doing some of it, but now you're doing it, I would argue, at scale as much as anyone. When did you make that decision, and why?
So it's interesting. We, at Aries, we pivoted to that at the beginning of COVID. And the catalyst was, for a lot of leagues, They were looking at an ownership group that was asset rich, cash poor in many respects. They were going to be facing acute liquidity challenges. And you had live events with no spectators.
Right.
So it became pretty obvious to us that if we could actually go in as a creative liquidity provider, that we would be able to do something special. So it actually started off as an idea that we would effectively build a bridge through the pandemic to leagues and team owners. By moving early, we were able to develop some pretty trusting relationships, I think at the league level, within the ownership groups and within the broader ecosystem, that we were there not to take advantage, but to really help people through it. And then, as everybody knows, through the pandemic, I think we really learned how much we just love sports and how much we miss them. And so on the back end of the pandemic, the valuations accelerated and we find ourselves where we are today. But that head start that we got by building that trust as a solution provider, I think went a long way to putting us where we are now.
And Jason, back to the relevance of the NFL. The Hall of Fame game, which is the first preseason game that was played this year, and this is consistent for the past few years, pulled higher television ratings. Now keep in mind, there's nothing but third, fourth string players that probably aren't going to make the team playing in that game. That game pulled higher television ratings than the average NBA playoff game. So you're talking about a preseason game with no starters playing.
Alex Rodriguez is backstage going, oh, God.
No, and the NBA is great properties. They're great businesses. I'm not saying anything negative about the NBA. The NBA is a great property, and Alex made a great investment, and I would be bullish about his investment. But I think when you just comparatively speaking, we talk about the relevance of the NFL and the power of the NFL culture in this country, I think that speaks for it.
Average viewership is 5 times the next nearest league in the NFL, 17 to 18 million per game. So nothing even comes close. And I think, you correct me if I'm wrong, 29 of the 30 most watched televised events of all time were Super Bowls. I think bested only maybe by the moon landing.
And year to year, it's anywhere between 92 to 96 of the top 100 most watched television programs are NFL games.
Right. Well, and then we spent a lot of time on college sports earlier, a very good amount of time, an appropriate amount of time talking about college sports earlier this morning, and clearly the money that's going in, the viewership that's there. I mean, you essentially have NFL Junior being created at the college level. Is that investable, Mike?
Yeah, absolutely. And we've talked about this. We try to approach the whole sports investment business as understanding the sports ecosystem. Mm-hmm. So that's what's so unique about what Tom and his team have is the stadium asset has now created an ecosystem around the stadium asset that they get to build other things into. And as Tom alluded to, you then have the ecosystem of Miami, which is actually one of the fastest growing, most favorable demographics in the country. And when you have that level of impact, you start to see other things come out. So I think when you start to see development of NIL and rejiggering of college leagues, all of that starts to become investable with innovative financial product. And so, we're always looking for those markets as they open up, but absolutely college sports, stadium assets, NIL support, media rights, et cetera, those are all going to become big investments.
I mean, you're going to have the college football national championship, right?
We are. I mean, every year we have Orange Bowl, we have semi, or this year we have the national championship. Last weekend we had Notre Dame, Miami.
Right.
The governor of Florida, the Secretary of State of the United States, and a nameless, one of the top 5 wealthiest people in the world were all in the suite at the same time. And the electricity in Hard Rock Stadium for that event, it felt like a national championship game. So, the relevance of Miami as a market, the relevance of sort of the investment that Steve's put into the stadium, the private investment, the fact that, we own the stadium and grounds, we're able to do these things. But these events, whether it's college football, international soccer, Miami Open tennis, Formula One, we had several, starting last October, we had Taylor Swift, we've had this summer Morgan Wallen, The Weeknd, Coldplay, the concert series this summer has been huge. So, it's just, it just continues from there. The number of events, I think we had 48 major events this year with 2 million people coming through the gates, which both of those are about twice what they were 5 years ago.
I mean, I remember being there for the F1 race this year, and I remember people literally being like, all right, we got to take this down, get ready for Shakira, right? Was that right? So, I mean, how many times have we all said that? So let's talk about F1 for a second. I mean, that has become, it was a big bet by you and Stephen Ross. Yeah. Again, Deep Tease, upcoming series, The Business of Formula One, Power Players, starring Tom Garfinkel. What has that business been? You've been in it as well, and where does it go from here, Tom? We have a new Cadillac team coming onto the grid. They'll be racing in Miami next year. How big could F1 get in your estimation?
I'm very bullish about the future of F1. I think Stefano Domenicali, who's the CEO, is a great leader. He's done great things. Liberty Media obviously has invested into the sport and done great things. In our case, it took about 4.5 years to get that deal done. Once we got it done, we had 11 months to pull off the first race, build a racetrack, build all these hospitality things. We try to do things differently sometimes, and we try to do things very from a customer centricity standpoint. What would I want if I was a customer? A lot of these races, not unlike stadiums, have sort of 3 homogeneous seating products. So you sit in the paddock club or a grassy knoll or in a grandstand. We created over 30 across different spectrums.
Although that first year, the beach was not quite that beachy, you have to admit.
Yeah, the beach. So we improved the beach, we improved the boats, we improved the paddock.
It was not
It was like a painted.
Well, the first year the problem was the paddock club was temporary. The food wasn't good and the experience wasn't great. We between year 1 and 2, it built a 180,000 square foot paddock building in about 7 months, and it's basically like a 90-story building laid on its side, and improved that whole experience. So by year 2, I think we got it right, but huge investment, huge amount of time, big bet, huge challenges to pull it off, but now it's a fantastic event. We were humbled to win the Promoter of the Year last year from Formula One. And it's essentially, we've created $1 billion business out of the parking lots, which is, $1
billion business.
Oh, sure. Yeah.
Wow.
By itself. I mean, we got a, 5-year, we got an extension, so we're now signed through 2041. So when you look at, EBITDA, future cash flows, take a multiple, it's $1 billion.
Like the scarcity value, right? 24 races, 3 in the U.S.
Yeah.
So you own that asset. You're one of 3. Take the strip out of it because that's multi-purpose. But most racetracks are single-use, single weekend, and you pay all this money. It sits there, and you open it up once a year. What they've created in terms of the whole programming there is really epic. I mean, it's quite different.
And so sort of circling back to where we started, how do you, as partners, how do you take advantage? I mean, how do you sort of opportunistically take advantage of the fact that this guy doesn't just run a football team, he runs a Formula One race and a major tennis tournament and concert series, et cetera. How does that play through to your investment thesis?
Aside from the fact that we love spending time together, I think part of what's happening in sports, which is why the Aries and the personal and everything's coming together, is I don't want to sound derogatory, but sports ownership up until maybe 10 years ago was pretty sleepy. You had family owners that were not waking up every morning and saying, how do I innovate? How do I maximize the value of this asset? How do I improve the customer experience? And so, the new generation of owners, both personal and professional, are bringing a level of sophistication and rigor and willingness to take risks that I think is just changing the nature of the business. Tom, in my opinion, is probably the most innovative executive in sports, just the way that he thinks about the client experience and
God, you guys are buddies. This
no,
is
it's
great.
true. It's true, and
we're not even drinking wine yet.
But you have to, like in any business, you have to wake up and say, how do I make? What does best in class look like? How do I make my business better? And so, we're constantly trying to leverage each other's experiences in sports and out of sports to innovate. And I think that's part of what's making the partnership.
So theoretically, you guys could go buy something. I mean, like you could partner to buy something in addition to what you already have together. Tom?
That would be great.
Okay.
Yeah, I mean, look, growth is paramount to what we do, and Steve Ross. The reason I came to work here in the first place is because he's a big thinking, entrepreneurial, out of the box thinking kind of person, and I like to think that way, and so to be able to over time like build the business and create these assets, and we had the paddock club, we had the racetrack. I had this idea to create this thing called Precision Drive Club, which is a race car country club of sorts for, people who are motorsports enthusiasts who have their own cars and supercars, and so we went and invested in it and built this business out of it. And
that's the most Miami thing I've ever heard.
It's a very Miami thing. Yes.
They're all like yellow DeLoreans, and Lamborghinis, and things
yeah.
like that.
So it's and I tell him, he says, yeah, baby, go do it, and then we go and do it. And look, it's not without risk. It could fail. It's in its first year. It's going well so far, and I think it's going to be a home run. But it's having someone like that who has both the capacity and the willingness to invest in big ideas, and to bring a level of, as Mike said, sophistication, business sophistication to it. I do think a lot of sports teams are sort of family-owned businesses. When you win, you sell tickets. When you don't, you don't. There's a mentality, a mindset of they kind of do the same thing every year, and we try to. It's all about people and bringing in great, talented people, putting processes in place, and then the results come. But we've got a team of people that are very innovative. They're very team focused, and we're disciplined about our business practices, but we're not afraid to take risk and try to invest in things and create new things.
So Mike, in addition to the partnership you have here, you are also a partner with another guy who was sitting in this seat earlier, David Rubenstein, in the Baltimore Orioles. I mean, talk a little bit about that. That's a personal investment.
Yep.
How did that come about? What was your vision for sort of making that investment? I know you're a huge baseball guy. I've known you for a long time. You love baseball. But obviously, you're a very savvy investor as well. What did you see there?
Well, from a deal standpoint, you have a original historic franchise with a very deep, loyal fan base in a large MSA with a phenomenal stadium asset. Camden Yards, I think, is one of the iconic venues in all of sports. We had a favorable agreement with the state to put $600 million into renovating and expanding the stadium, which, again, quite unique in sports. Most people had to fund that themselves. And while we're in a tough division, it also gave us an opportunity to have an asset that was going up against the likes of the Yankees and the Red Sox frequently in major media markets. And we thought that if we could, again, bring best practices to what had been a family-owned business for almost 35 years, that there was going to be upside on the revenue side, and that's absolutely been the case. So it started with a love of baseball. I think David would tell you it was also a love of Baltimore.
Yep.
And Baltimore gets a pretty bad rap for all the wrong reasons. It's actually a really spectacular city. It's got port assets, Hopkins, University of Maryland. You've got major corporate presence there, proximity to DC, Philly, New York. So I'm a big believer in the vibrancy and call it maybe the resurgence of Baltimore. And as an owner of a sports team in a market like that, with a little bit of investment and intentionality, you can have a huge impact.
Well, in fair disclosure, or full disclosure, one of the minority partners in the Orioles is Michael Bloomberg, who,
yes,
obviously also owns this place.
So and a few other things.
And a few other things. And I believe when you're talking about Johns Hopkins, you might be talking about the Bloomberg School of Public Health.
Yes, he's been a big supporter.
Big supporter. So as we start to wrap up, I would love to hear from you guys. This is an audience of people who are in the sports ecosystem. They're investing in sports. They're looking for the next thing. Tom, you have been continually, as Mike said, innovating in your career. You did a stint in motorsports, before you came to the job you're in now. You worked in baseball as well. What's on your mind in terms of what's around the corner, in terms of investments, in terms of things that people in this room can sort of sink their teeth into as they want to get deeper into the business of sports?
Yeah, it's a great question. Certainly the media landscape is changing, and how content is consumed is changing. I do think live events are more valuable and more important than ever. And I say that, there's research that shows that loneliness is killing more people today than cigarette smoking, right? There's this idea that there's a whole generation of young people today that grew up isolated. You go to a restaurant, you see them sitting across from each other on their phones, texting each other, and not talking to each other. There's more teenage depression, more anxiety than in history. And live events, what it really is about, and I tell the team this because it's more important, like what we do is not just sell tickets and drive revenue and profitability. we bring people together to experience life together and have shared experiences. And whether that's an international soccer game, a concert, a tennis match, a Formula One race, a football game, like people come together. You know, if you saw these people from the University of Miami and from Notre Dame at this game the other night, I mean, it was electric. And those moments, even if they're taking selfies and posting them on social media, those moments of bringing people together.
And they're not talking politics.
And they're not talking politics. And they're also, look, AI, you know, is going to change every business, ours included. But it's not going to change that as human beings, we still need to have connection and come together and share life together. And it's still better to be in a stadium and experience, if you're a University of Miami fan, watching this wide receiver make this one-handed catch, which was unbelievable, and score that touchdown and see, you know, and be there and experience it with a crowd. I mean, we designed the stadium. I designed it intentionally to keep the crowd noise in. The video boards are tilted 4 degrees this way. I did an audio engineering study to make sure it keeps all the crowd noise in. You know, those things matter. And so as I would say to the audience, as you look at investments, you know, the media landscape's kind of an obvious one and how that's changing and how things are consumed. But live events are still critical to humanity, to fundamentally being human. And that's kind of what we do. And so investing in that and trying to continually, again, to be customer focused. So a lot of stadiums, they do things to try to make things easier for their employees as they're operating. How do we most efficiently get this many cars in and out of here? I do things in a place where I'm constantly challenging the team. No, put yourself in the car, you're the fan. Make it easy for them. I don't care if it's hard for us. And so as things continue to evolve, I would say the operators who are doing new things to create great experiences for people, getting in and out of the stadium, the bathrooms, the food and beverage, the hospitality, how things are shared, your seating product, your whole experience, that are focused on those things, they're the ones that are going to win more in the future.
Last word to you, Mr. Arougheti. 30 seconds. Where should they?
No. It was beautiful.
This
whenever we talk about
out of control.
Whenever we talk about our shared humanity, I think he's spot on, though. This all comes down to live, unscripted content and shared humanity. And what's interesting about the way that we're all consuming this is it's globalizing. So China is a massive market for the NBA. The NFL's, you know, beginning to expand into Europe, and you have to start having a global view. I think historically, and I'll use the Orioles as an example, very local market. And if you were a star in the Orioles, maybe you could break out onto the international stage, but once in a generation. As this content is globalizing, you're now creating international stars and celebrities and role models and idols, and that's accretive to the entire ecosystem. It's good for the player, it's good for the team, it's good for the league, and it's good for the value of the content. So that's why these values are going to keep going up. It's just that the TAM just keeps getting bigger and bigger.
Well, thanks for this moment of shared humanity with this audience. Thank you, guys. Thank you.
Please welcome to the stage Gary Bettman, Commissioner of the NHL, and Ted Leonsis, Founder, Chairman, Managing Partner, and CEO at Monumental Sports and Entertainment, for a conversation with Bloomberg's Scarlett Fu.
Hi, everyone. Thank you for joining us. Now we get to talk about hockey and sports, highlight of my day. The puck drops in 33 days on the new NHL season. Yay! After a banner 2024-2025 season where there was record attendance, there was the success of the Four Nations International Tournament, a new all-time leading goal scorer, Alex Ovechkin of the Washington Capitals, and off the ice, a new CBA more than 1 year before the deadline, eliminating any possibility of any kind of work stoppage. So with that as our backdrop, I want to start on what's worked for the franchises, the league, and in creating engagement and growth for your respective entities.
But you did leave out one thing.
What did I leave out?
We have, by 2.5 times, the largest media deal in the history of Canada.
There you go, the deal with Rogers.
Which was 2.5 times our last deal which was the largest media deal in the history of Canada.
Okay, so that's a victory for sports valuations, for media rights, for the league.
All good.
All good.
Ted liked it.
Ted, you liked it?
Liked it.
Okay. Ted, you've built monumental sports, which includes the Caps NHL team, the Washington Wizards NBA team, the Mystics WNBA team, around this idea of increasing fandom. So I'm curious, what does that look like from the C-suite, where you sit, and what does that look like to the average fan? How does it end up looking like for them?
We're spending most of our time now trying to capitalize on, we captured a new generation of fan. The Ovechkin effect, if you will, 20 years, all these young kids. We have the most active, one of the most active in North America, youth hockey. And you have to follow where the young people are, because that's who your fan base is going to be. And we have to fully make the pivot from linear, analog to digital. You heard the last speakers talk about the importance of global. We've been global from day one. And you know, we're in Washington, D.C., and the most popular athlete in the history of the community is Alex Ovechkin, a Russian. And so we spend all of our time trying to figure out how can we build a platform, be a really, really important business in this 10 million household community. Obviously, the linear part of that cable plant has shrunk. We bought our cable company, our RSN, from Comcast and NBC, and now we're able to make it a IP distribution network for us and a cross-promotion arm. And we put all of our games there. We've gotten renewals, but not only from the cable side, but now we can work with the YouTubes and the Amazons. And we think we have to become just embedded in the lives of 10 million people from Richmond, Virginia, all the way to Delaware.
So it looks very seamless from the fans' perspective, because it's where it should be. Wherever they turn, there you are. Gary, in keeping with this idea of Alex Ovechkin, everyone know who Alex Ovechkin is? Yes? Okay. His quest to surpass Wayne Gretzky as the all-time scorer, obviously that was a big thing, but it's not a regular thing. You can't count on something like that happening every season. So how do you build on the momentum that was generated and continue to activate fans?
Well, that's a great question, but I want to add one thing, which is the best indication of what a visionary Ted is. He has created his own ecosystem, and they have content 24/7, 365 days a year that they create, because he's aggregated all of the assets, whether it's teams in a variety of sports, the arena, or his own streaming platform. That's what makes it all work. And he has always been fan-facing, consumer-facing, from the day you first bought the franchise, which was, what, 26?
Well, I was a season ticket holder before I bought the team. And
he was a fan first.
So what Ovechkin did is really what sports is about. It captures the imagination. It gives people a chance to focus on things that are superhuman. You know, Alex broke a record that nobody thought was possible to break, and it's a testament to him, his physical prowess, his skill, his endurance, his ability to not get injured, and the support that he got from his organization in terms of the players they surrounded him with and everything they've done off the ice. So what do is you look for big events, for big stories, and you use every platform imaginable, whether it's linear, streaming platform, social media, and no different than what we did in February with the Four Nations tournament. I mean, we created something that even if you weren't a hockey fan, even if you weren't a sports fan, you felt compelled to tune in because it was so topical and so intriguing, people wanted to know more.
Well, geopolitics helped a little bit there too, right?
Well, a little bit, but yes.
We're on national TV the most of any team next year. So there's still, Alex is still a very popular player, but it's also, we finished first in the East last year. We had a really, really good team. We weren't we weren't out of context, because hockey, at the end of the day, is the most competitive of sports. The playoffs, obviously, are the showcase of that. And we've been able to build hockey in our community. People would say that DC was a basketball town. It is, but now it's a hockey town. And we're heading towards $1 billion in revenue. Monumental Sports and Entertainment. My goal is to make it the most valuable regional sports and entertainment company. We have currency, we have great investors, we have one platform, and right now we're being valued $7-8 billion. 2 years, because our business is very predictable, we'll hit $1 billion. Maybe it's worth $10 billion, which would mean Gary would be CEO of a $300 billion company. I don't think you've treated the commissioners with the respect that they deserve, right? No, I'm serious. When you look at it, they're running a global branded business with billions of fans, hundreds and hundreds of millions of customers, fans. The fan avidity in this business is off the chart. We say we're not public companies. Go, yeah, well, he gets booed at every Stanley Cup, right? You hear from the fans. They're voting every single day. That's why the renewals are so important.
Yeah.
What are we averaging as a league in our renewals?
Over 90%.
Over 90%.
Because our fans, most people don't focus on it, our fans tend to be the most avid, the most affluent, the youngest, and the best educated, and the most tech savvy.
So let me pick up on that idea.
By the way, I have to negotiate my next contract with you.
Ted will be your agent. Let's pick up on that idea of having the youngest audience and the most tech-savvy audience, because your partnerships matter. As the CEO of a $300 billion company, as Ted put it, partnerships like TikTok on the Capitals away jerseys, Roblox to create a metaverse experience
Coupang
to reach that younger Gen Z audience. I'm sorry?
Just announced yesterday, Coupang is going to be one of our...
There you go. So that idea of teaming up with brands that matter to a younger audience that perhaps isn't trained to watch TV the same way we are.
There are two parts to answering that question. One is the authenticity and the game itself. And the good news for us, and I never like to talk about other sports, but when it comes to pace of play, there's more action. You can't be on your phone if you're watching.
You'll miss something.
You'll miss something because it happens fast and furious. So the amount of action to the amount of length of a game works very well for us, and it's compelling for younger people. The second thing is you've got to reach your fans and your would-be fans on their terms now, particularly now. You got to give them, as everybody says, what they want, when they want it, how they want it. It didn't get a lot of attention, but when the old deal in Canada with Rogers 12 years ago included a streaming component, it was really the first national sports league deal to do that. And our deal, most recent deal with ESPN, and we have Amazon in Canada, we've always looked to see how can we use technology, not to change the game, but to take essential elements of the game and make them more fan or consumer friendly so that we can bring people inside the game. And that's where, because the game is so fast, using technology, puck and player tracking, does a couple of things for us. One, we're creating millions of data points a minute, and that's enabled fans to get inside the game and understand it better if they didn't grow up as hockey fans. And using the metaverse, we actually use the puck and player tracking to use animated versions of our game so that young people can get attracted to watching it using their favorite cartoon characters.
Yeah. And reimagining the game, especially on a global basis. We're the largest investor. I'm chairman of Team Liquid. And Team Liquid is the #1 esports in North America. We just came in second place in Saudi Arabia. It was $30 million in prize money that was awarded there. And we play on 11 different platforms. And you'll read, it's a winter, nuclear winter for esports. That's like saying the web, this was bad. In the mid-90s, the web blew up. Don't make any investments in web companies. I think 25 years ago, the company I helped to create, AOL, we had a $200 billion market cap. Microsoft had a $400 billion market cap. It's 25 years later, AOL doesn't exist. Microsoft has a $4 trillion market cap. And they've had to reinvent themselves. They're now an AI and cloud computing company. So Team Liquid, we play in 11 different platforms. And the people in Saudi Arabia, which are building a whole city and infrastructure for tourism, for their young people around esports. They said, what other sport can we reinvent and make competitive? And we said chess.
Chess?
Chess. Okay, now.
As an esport?
So we launched and we signed Magnus Carlsen, the world's most famous #1 chess player, and he won the world championship a couple of weeks ago, and it's boomed now with young kids. Young kids go, chess is cool. It's analytic, it's algorithmically oriented, you can train online, you can do multi-user games. So it's a really interesting loop, if you will, of you can use technology to reinvigorate, what looked like an older sport. That's what I think we've done in the NHL. When I first came in 26 years ago, I said, this looks like a video game to me. I mean, you've got the glass, the players are out there, they're working as hard as they can, but for 30-second shifts. Alex probably stays out a little longer than he should. But the speed, the music, it was a video game come to life.
Yeah.
I said, we have to connect that speed, the sounds, and like I got rid of the organ. I can't tell you how many older fans hated me. I said, but kids,
you got to move with the times.
Yeah, kids want different music. They don't want organ music. So just paying attention to the younger audience, and it's amazing how fast time goes. Gary, how long have you been commissioner?
32 years.
32 years. He's the most tenured commissioner. Not 10 years. He's got 32 years.
And we'll get to maybe your future plans in just a bit. But as we grow the audience, as you grow the brands that are in your company, that often means expanding the league. And Gary, I know that there's been discussion of expanding the league this year by the NHL, but ultimately the league decided against moving forward with it for now. Why is that? Why not move now?
Well, we're at 32.
Is that a magic number?
Well, no. And in fact, we were at 31, and people said, well, you got to go to 32. And I go, you don't expand just for symmetry. Our two most recent expansions are Seattle and Vegas. Vegas, probably the most successful. Seattle as well. Expansion in any sport in modern times, both in terms of their business presence in their communities and how well they're doing, but also in terms of their performance.
Yeah, on the ice.
Because the historical model for expansion was, in all sports, you charge as much money as you can, and you give as few players as humanly possible of quality. And the team, there's an enthusiasm in the market for 2 or 3 years. The team chronically loses. Fan interest dwindles, and about 10 years after the start, they get competitive. Well, we have, because of our economic system with the players, I think we have the best competitive balance of the major sports, and the owners understood and supported the notion, why would you bring in a team that couldn't be competitive? We didn't expect the team to go to the Stanley Cup final in its first year, but I think there were a lot of reasons, including emotional reasons, relative to the shootings in Vegas, which happened the week before the team started. But at the end of the day, 32 is a good number. I think we could do more. There's enough worldwide talent. We have a worldwide talent pool that we could handle more. We have expressions of interest, I don't know, from 6, 8, 10 different cities.
Any in Canada?
Yeah, always.
But even with the economics right now of
The economics are okay. I know there's been a lot of discussion that, well, what have the tariffs done to the economics of teams in Canada? So there's no simple answer to anything, so you'll have to indulge me. Our system, first off, is we pay our players and we compute our economics in US dollars. So there's already an automatic hedge built into the system by virtue of the fact that it's US dollars converted from Canada. We have revenue sharing, which deals with that as well, although some of our most successful teams, even with the equalization or without the equalization, are in Canada. So the system deals with the fact that there's a discrepancy between US and Canadian dollars. And in fact, I've been doing this long enough. I was there at a time where the Canadian dollar was stronger than the US dollar. So you learn, and frankly, if every time I guess in terms of where we should be hedging, I'm wrong. So if you figure out what we're doing, do the opposite, and you'll be fine, because we've been consistent. But the second part is, I had a lot of the Canadian owners call after the announcement of the tariffs, very concerned about what was going to happen. And I said, well, we'll have to see what happens. The only concern is if it impacts the Canadian economy, because the dollar, Canadian dollar today, is actually stronger than it was 6 months ago as against the US dollar, because I think, and you know this better than me, the US dollar softened a little bit against worldwide currencies. So I think it was 70 cents on the dollar in January, and it, as of this morning, it's one of the things I check when I first get up every day, was 72 cents, and I think it was as high as 73 cents. So unless the Canadian economy collapses, and it doesn't look like that's going to happen, the dollar isn't going to be much of an issue for our Canadian clubs, any more than it's been historically.
Okay,
and
so
being in Washington, D.C., and people in power hearing that narrative, it's no wonder that our president said, oh, Canada, it's our 51st state. Right? Everything is being balanced in U.S. dollars.
By the way, the notion, and not to get political and not to dispute anything our president may have said, if you go to Canada and you spend time in Canada and you get to know the people in Canada and you understand the culture of Canada, there is no way that it is the 51st state. And you know, they're not some little kid sibling who, you know, just is there to toy with. They have their own history, their own traditions, including making hockey the #1 sport. I mean, we're like the NFL in the U.S., and that's an important thing.
That's why you were able to get the big dollars from Rogers.
Although our TV ratings would go up dramatically if we were counting the Canadian audience.
it certainly would. I got to ask you, Ted, because you talk about the trade situation, you talk about the geopolitical situation, and a lot of this conference has focused on the big money coming into sports, particularly from institutional investors. And Monumental is the only American pro sports entity that has taken on sovereign wealth. The Qatar Investment Authority bought about a 5% stake in 2023, valuing your company at over $4 billion. Can you just walk us through the thought process behind taking them on as an investor?
Yeah, and I think, I mean, it's one of the reasons that I agree to come and speak here. I paid $85 million for the Capitals 26 years ago. I paid it all in cash. And the leagues have done something really smart. They have debt limits. They protect us from ourselves.
Just like a salary cap.
And as these businesses started to get better understood, and they look like software service businesses, 80% of my revenue is contracted. Think about that, right? It's just like we look like Salesforce.com or Oracle. We do a big media deal, it's for 10 years. We do a naming rights deal, it's for 10 years. there's built-in escalators, just like a software company charges per seat more and more every year. It's a really beautiful business model in that way. And so I kind of looked at this and said, private equity is coming in now. And the reason private equity was originally coming in, it's not where it is today, but they were originally coming in because there was a report done that said 70% of the minority owners of NFL teams were 80 years of age or older. So when they died, or they wanted out, or their estate wanted out, how would you get liquidity? I've had 2 partners in 26 years die. They put $25 million into the company 25 years ago, and now it's worth $300 million. I don't have $300 million laying around in cash. So Arctos, they've done a great job. A lot of the private equity funds are coming in. Originally, they would monetize the small positions. Instead, what they've ended up doing is being a part of the purchase of these teams. I mean, I see some clouds out there. When I read someone's buying a team at $8 billion, and they're going to use $1 billion of debt as a part of the down payment. And then the main owner has to own 20% or 30%, depending on the league. That's $2 billion. That's, those are big, big numbers. And so when private equity gets in and they're getting more and more aggressive, they want an exit. They want out. Now, a sovereign wealth fund, when I met the people from Qatar, they say, New York, Washington, D.C., LA, professional sports, 100 years old. Your building, your real estate is blocks. You can see the White House from my office. You can see the Capitol. We want safe harbor. We don't want an exit. We want to take our money and give it to you. You'll be the safeguarder. It's their...
So it's patient capital.
Very patient capital and a lot of capital. I mean, we know that some of the funds that are running around in sports, it's $3 billion, $5 billion. Sovereign wealth funds have trillions of dollars, right? And they're looking for, and the floodgates really should open. It's the smart play because they're very patient. The league rules have it. They don't come to board meetings. They don't come to games. They can't. They're not on the board. I mean, I don't give them tickets to games. I've got partners. I'm hosting bar mitzvahs. At the arena. You don't get that from sovereign wealth funds. So I think, we did something good in getting the pension funds and the sovereign wealth funds in, and it's the right thing for the leagues.
And it's also a recognition of the strength of what we are. I mean, we're media companies, and I believe, and I'm probably biased, there's no more important or compelling content, no matter what the platform or the form of distribution is, than live sports.
Live sports. I promise that we'd get to your future, so I have one final question for you.
We can skip that question.
No. You're the longest serving commissioner in North American sports, as we talked about, 32 years. What kind of succession planning is taking place once you decide to move on?
The answer is I have a very strong bench. I have great executives who work with me, particularly at the C-suite level. I have a deputy commissioner who's been with me for 26 years, Bill Daly, who is terrific. And if I got hit by a bus walking out of here today, he could step in.
Let's hope not.
But it was funny. I've said to my executive committee, not that I'm getting ready to retire, but I said at some point we need to focus on this because I'm all most of them have ever known. I mean, there are 3 legacy families in Boston, Detroit, and Chicago, original 6 clubs. And then there's Ted and everybody new who's come in since I've been commissioner. And when you get identified with something as much as I have been, succession becomes an issue because question of style and presence and branding. But I'm also cognizant of the fact that at some point there needs to be a more youthful person pitching the brand. And I understand that. So at some point...
My wife the other day told me that when I see Gary, said, "You look great." And Gary said, "I've lost 25 pounds.
But we don't tell everybody that.
So, succession planning is something that all boards have to be focused on.
Sure.
Yeah.
But right now, I would say we're in total alignment on growing the game and growing the revenues.
But it goes to whether or not, and when I raised the issue for the first time, I said, listen, you need me to do a new collective bargaining agreement?
Yeah.
Check the box. We need to do new media agreements.
Check.
And I said, but as important as that is for any CEO and a board, as important is what succession look like, because you want the business to continue to run as flawlessly as possible and not hit bumps just because you're changing who's running it.
All right, and with that, I'm going to wrap things up. Gary Bettman, Commissioner of the NHL, Ted Leonsis, Founder, Chairman, Managing Partner, CEO of Monumental Sports and Entertainment. Thank you. Please welcome to the stage Don Garber, Commissioner of the MLS, and Cindy Parlow, President of U.S. Soccer, for a conversation with Bloomberg's Vanessa Perdomo.
Oh, my mark is over here, I think. Oh, actually, I'm not sure.
Don't get
but hey, everyone.
Emily.
So, we're here to talk about the World Cup. Who's excited for a 2026 World Cup? And we heard those intros. We have two of the biggest leaders in soccer right here in the U.S. right now. This is the first time we're going to be hosting a World Cup since, in my opinion, the greatest team in sports history won the 1999 World Cup. Cindy, the 99ers were iconic, but we're 9 months out from the 2026 World Cup. As the head of a federation who's hosting this event, what are these next few months look like for you?
I think it's both hectic and overwhelming, but also super exciting. What people don't realize is this is going to be the biggest World Cup that there has ever been. There's 48 teams now. Mm-hmm. So it's going to be like having 4 Super Bowls every single day for 5 weeks.
Sounds pretty fun.
I cannot wait.
And Don, the last time the World Cup was here, the Men's World Cup was here in '94, the MLS didn't even exist yet. So how do you, and you're a big part of this World Cup, hospitality and infrastructure. Tell us how the MLS plays a role in this World Cup.
I will, but before, I'd like to give a shout out. You heard Gary saying wonderful things about his owner in DC. I'm going to give a great shout out to Cindy, who has won gold medals, lifted World Cup trophies, and now transitioned as an athlete to be the president of our federation, and has done an incredible job turning U.S. Soccer around to what I think is the best national governing body in the USOPC. So proud and honored to be her friend
Thank you,
and to be on the board of U.S. Soccer for many years.
Yeah.
When the World Cup was here in '94, it was the most successful World Cup of all time, including Germany and Brazil and South Africa and Qatar, just because of the size and scope of our buildings and the fact that we're such a diverse country. And even back then, lots of people loved the game. FIFA required a commitment from U.S. Soccer back then that they had to launch a first division league. There was no first division soccer league, men or women, in 1994, and MLS 30 years later is the outgrowth of that. So to Cindy's point, this is going to be bigger than anybody ever imagined. I think FIFA doesn't yet realize how big it's going to be. Our country loves big events. We've got incredible venues. We love to engage with big hospitality and trying to share in the excitement and drama and appeal of big sporting events. So it's going to be massive, and we're all super, super excited about it.
Yeah. I mean, and you have to get through the rest of this season. You have to make sure 2026 starts and goes off without a hitch while still preparing for the World Cup. So how does that for you? Do you have to hire more people? Or are you just more in touch with U.S. Soccer and FIFA?
Well, I think it's twofold, right? What does the Federation do in a very different role than we as a member of the Federation, as a league? But it's important. You know, this is the rocket fuel that will drive popularity, interest, and engagement in our sport to even higher levels than our 30 teams and you know where the league is today. But it's work. You know, you've got to do the work. You can't just assume because millions and millions of people are going to be coming into our country now in ways that I think are perhaps will be hopefully as welcoming as they've ever been for a World Cup. We've got to do the right marketing. We've got to get the right players on the field. We've got to ensure that our teams are doing fan fests and teams in Canada and Mexico. So we have a team in Vancouver, a team in Toronto that will be hosting the World Cup. Got many, many MLS teams that will be host cities, and we've got a lot of work to do. And I think people will feel the power of what that's going to be with the connectivity between our league and other men's leagues, and certainly the women's league as well.
Yeah, absolutely. And Cindy, can you talk a little bit about that, about the partnership a little bit more? How much are you talking to the MLS? How much are you talking to FIFA, the NWSL, all the key stakeholders?
Well, we don't talk to MLS.
They've never met each other.
No, first time. You know, as FIFA is running the day-to-day of the tournament, we as the Federation are focused on working with our co-hosts in Mexico and Canada, the host cities, and all of our members and stakeholders to make sure that this World Cup not only has a tremendous impact where the games are being played, but in every state across the country. And so as part of this, we're launching our first foundation in the Soccer Forward Foundation at U.S. Soccer. And so we're really focused on increasing access to the game. So think getting more kids in communities and in schools more involved and more places to play. The legacy of the 1994 Men's World Cup was the launch of MLS, as Don alluded to. And then for this, it will be more of a grassroots effort.
Yeah, and on that, I mean, you said trying to get everyone from every state, even without a host city. How do you get those states involved?
Yeah, so we have members in every single state, and so we're working with our members and our stakeholders to make sure that, you know, one size doesn't fit all. What we're doing in Alaska, we're probably not going to do here in New York. So tailor-making everything to each state and each community so that it works for them.
Yeah.
And just remember, there's host committees.
Right.
So here in New York, the two governors and Mayor Adams are deeply engaged, and you know, just at an event not that long ago where they brought together influencers, not social media influencers, but people that can help move the needle and ensure that, most importantly, I think for all of us, and I'm on the board of U.S. Soccer, we've got a board meeting tomorrow, U.S. Women's National Team over the weekend. We want this not to be a Taylor Swift concert. You know, this has to be something that really deeply engages with the soccer community and leaves a legacy that we'll feel for generations, so that it isn't just a trampoline, as we were talking about in the back, where everybody gets excited and jumps up and says, isn't this wonderful? But that it has depth and a real sense of accomplishment and achievement for all of the stakeholders in the entire ecosystem. And that's a task for our federation, it's a task for all of the leagues, it's a task for all of the members, and we're up for it.
Yeah. And on that note, though, when you're talking about trying to get everyone involved and things like that, but when we're seeing people come to the stadiums and new people and all these people, they're going to wear Australia jerseys, Brazil jerseys, and all that, how do you get them to then wear Rebel jerseys?
Yeah, I mean, that's the task, right? It's a lot about data. It's not just about hoping that it will happen. It's working with our federation, with FIFA. It's working with our ticketing partners. MLS is going to run with On Location the hospitality for the World Cup through a separate company that we have that does soccer commercial activities. Most importantly, it is about having a direct relationship with that person who's coming in and experiencing football, soccer at its highest, and giving them the content, giving them the opportunities, giving them the offers, giving them the players that ultimately will inspire them. I was in Kansas City yesterday with our club and the host committee, and it is about how we can share information with the committee, with our clubs, having fan fests that we can control ticketing for, so that all those people who are here are going to be connected with, on the men's side, obviously Major League Soccer, and when the World Cup is here, Women's World Cup in 2031, it'll just be hopefully a lot of learning to be able to do the same thing for the NWSL.
Yeah, absolutely. And Cindy, on that side, you know, as we're talking about what we're going to be able to do and all the preparations you're going to make, and obviously you can try and do what you can for on the field and all of that, and hiring a world-class coach obviously helps that, but you can't determine that, right? So what are you doing on the business side to make sure that this is a successful World Cup for U.S. soccer, and how would you define what success is for the U.S.?
Yeah, I think our men's national team has a real opportunity to do something special. I know what it's like to play at home in a major event, playing in the 99 and 2003 World Cups and the 96 Olympics, and it's electric, right? To not only the fans in the stadium, but to know that the entire country is behind you, believing in you, supporting you. I have full faith in our men's national team that they, on any given day, can beat any team in the world. And if they go on a deep run in this tournament, watch out, because this country is going to get behind them. And, you know, I have full faith in Maurizio and his staff, as well as the entire team. So I'm looking forward to it. I think it's hard to define, like, if you make it this far, then this is success, and if you don't, it's a failure. The margins of victory are so razor thin right now at the world level. And so even in 99, everyone thinks that we blew every team away in the tournament, and that is just not the case. It was a battle throughout the entire tournament. And so to have the fans behind us, to have the whole country rally behind this team is going to be very important.
You know, I'm going to make a comment that goes back to the early days of soccer in its current sort of version, the 1.0 to 2.0 to 3.0. And back in the day, we were so dependent on the success of the men's national team. We went out, we signed a bunch of American players. We had the MLS strike force, and people were going into bars when the games were in Korea and Japan, and they were connecting to a player that would come off the field and then play for the Columbus Crew. In this most recent window in our game, we take breaks for international events. We have players, 130 players, that are playing for dozens of different countries. And yes, many of them are MLS players that are playing for the US, but so's Leo Messi and Rodrigo de Paul playing for Argentina. And if we have 2 or 3, Thiago Mato, who played in MLS until last year, if we have 3 players playing for Argentina, and Argentina does really well in the World Cup, that's really important as well. A league for New America, lots of diversity. So I think the sport has changed a bit. Cindy had referenced Mauricio. He's a world-class coach. He loves our country. He loves our league. I think he's going to do as good as he possibly can do. But we in the soccer business can't be dependent on, you know, the drop of the ball or, you know, the convenience of winning at the right time. We've got to lean into what the World Cup means, and then ultimately try to benefit for that from a business perspective and from a fan development perspective.
What does it mean, do you think?
Well, it means if the U.S. does really well, people are going to be saying, boy, we're geniuses, right? And I don't really necessarily think we can depend on that. We've got to do the work to ensure that fans who come see what it's like to attend a game in the United States or Canada or Mexico. And now when everybody leaves, we're here. We have 30 boats on a rising tide. We got more boats than anybody else. So if they're going to a game in Kansas City and they love that experience, well, Sporting Kansas City's got an unbelievable stadium, a great training ground, a major country will be basing there, and ultimately how do we ensure that we're connecting with that fan and also that casual fan who is loving the game but doesn't love Major League Soccer yet. And we've got to have the right advertising during the World Cup, the right content, the right social engagement, the right social media with those players representing what could be as many as 80 different national teams. And ultimately, at the end of the day, if we do the work, we'll be more popular and the business will be stronger.
Yeah. I want to get like that on that social media aspect of it. That's obviously something pretty new that you haven't had to do your whole career, right? You've been commissioner for 1999. How's that changed as we see social media and technology and everything play into it?
I'll talk about it, and obviously, Cindy, the Federation's got an active group. It's a massive part of our entire operation. Traditional advertising is not where our fans are living. They're very digitally oriented. We have the youngest fan base. I heard Ted or Gary say, hockey's got the youngest fan base. We're 10 years younger than the National Football League.
We got a fight up here.
Little fight going on. It's a young fan base. They're very digitally native. We have a deal, the only global deal with Apple for that reason. We want to go where our fans are getting their content and how they're communicating with each other, and we are deeply, deeply invested in that, as are our clubs. So whether it's through Instagram or TikTok or whether it's from any other forms of social media, we're powering our teams. In the early days, we required it. They had to develop content that they were going to distribute through different vehicles that we would then create those relationships with. Now it's taken on a life of its own, and ultimately we're going to be very dependent on those players, those clubs, ensuring that content is getting in the hands of current and future fans.
Yeah. Cindy, what about for you? Because I watch all the time. There's Behind the Crest. There's all of these different things that the U.S. soccer puts out. But for some of the for some of the players on the men's national team, they're not here all the time. So how do you go about that?
Yeah, I think it's we use social media to tell their stories, right? And so as the team is much younger, there aren't as many people who know who all of our players are. So using social media and other forms of media to make sure that we're telling their stories, because they have incredible stories, and talking directly to our fans. On a personal side, I was kind of anti-social media. My team has been on me nonstop to do more, so I'm finally starting to dabble in social media a little bit. So let me know how that's going, everyone.
Yeah, everyone follow at Cindy Parlow. One of the other things I think was really indicative of that I wanted to get into is who the U.S. soccer market is. We just had the Club World Cup finish here a couple of months ago, and a lot of people are using that as a precursor, seeing what was going on there. I was having a lot of conversations with people from different leagues who were coming here to really capture the U.S. fans, and that was really important to them. But not a lot of people think of the U.S. as a soccer country. I'm looking at my English colleagues here. And they don't think of us that way. So how would you describe the U.S. soccer market?
We are the ATM of global soccer, of global football. So we created a market that didn't exist. In the early days, FIFA could not sell the English language World Cup rights for the 2002 Korea-Japan and 2006 World Cup in Germany. No media company in this country wanted to buy those rights. So we did what any entrepreneurial group of folks would do. We bought them. We created a company that marketed them. We flipped them to ESPN. We produced the U.S. feed, and we created a commercial opportunity that ultimately was a vision of creating the value of global soccer in America. And now it is by far the most valuable soccer market. There's more soccer on any forms of media here than in any other part of the world. FIFA's rights are higher here than any other parts of the world. The commercial energy around Major League Soccer, our teams, our league is more valuable collectively than any other league in the world. The value to what Ted was talking about, the aggregate value of MLS teams, or $23 billion. So it's a valuable enterprise, and the rest of the world has woken up and said, I got to capture that opportunity. They're opening up offices here. FIFA had the Club World Cup here. MLS, thankfully, was the promoter of ticket sales for that, but the revenues there are massive compared to what they would be anywhere around the world. And that, I think, is a credit to what our country is. It's why we have this conference, and soccer is no different than any other sport. Get the right owners, the right staff, the right vision, you get the right energy, the right partners, and we get the commercialization of sport. So I think it's just the beginning. And I'm curious as to how it's all going to play out. There'll be perhaps regular season games that'll be played here. The Club World Cup had hundreds and hundreds and hundreds of millions of dollars of revenue that didn't exist before the Club World Cup. We had a final in Seattle for a tournament called the Leagues Cup on Sunday. We had 70,000 people for not a league game. And so I think the future is incredibly bullish and bright.
Yeah. I mean, you touched on it there. There are some teams who are trying to come here and play, European teams who are trying to come here and play in-season games, and you had them here.
Yeah.
Does it, you're poking around in your house. Are you a little worried about that?
Yeah, I mean, the great thing about our country is that it's commercially driven, a lot of laws that provide lots of freedom for companies, entities, whether they're domestic companies or international companies, to operate, with the freedom and protection of our antitrust laws. But there's a game that's been announced that Spain is going to, La Liga is going to play in Miami in December. I read something today about Italy looking to play games here. At the end of the day, soccer or football globally has got an incredibly passionate audience. And having worked in the international area at the NFL, it's a little different to take an NFL game over to Brazil, like will happen real soon, than is take a regular season away from England. If you're a Manchester United fan, you probably don't want to see that game go to Chicago. But, if they can figure that out and it makes sense, then all the power to them.
Yeah. Cindy, as I mentioned before, some people were using the Tournament Club World Cup as a precursor to try and figure out what maybe 2026 would look like. And they're obviously very different beasts, but some people are pointing to early games, half-empty stadiums, and the heat that some teams were dealing with. Obviously, FIFA has to address some of those things, but as a host nation, what can you do to address some of those things for you to make sure that we're presenting our best foot forward?
Yeah, I think we're focused on what I said before. While FIFA is running the day-to-day, we're working to make sure that the fan experience is good, that the area around the stadiums is electric, supporting all the people that are coming into our country as well as our own fans here in the U.S. And I'd like to point out something that we haven't mentioned is while this is the Men's World Cup, it's going to benefit all of soccer, from the grassroots all the way up to the professional leagues, both on the men's and women's side, boys and girls at the youth level. So, so that is where our main focus is, because as Don said, eventually after 5 weeks, all these teams are going to leave. And we have to make sure that this World Cup has a lasting impact all across our country and just accelerate the growth of our sport.
Are there metrics you're looking at between growth from on the youth side where it is right now to where you're hoping it goes after the World Cup?
Yes, I mean, right now, every kid in our country doesn't have the opportunity or the access to play our game, and that has to change. So that's going to be a big focus of ours to get soccer into schools and into every community so that anyone that wants to play our game has equal opportunity to not only access it, but to be able to be successful. And you can define success in a lot of different ways. So that will be our focus.
Yeah, and we're running out of time here, but a few last things. I mean, like you had said, this is going to impact everything. And as we're looking forward, it's the 2027 World Cup, the 2028 LA Olympics, then hopefully the 2031 Women's World Cup, which I'd love in writing MetLife Stadium final again. I'd love to get that on the books for 2031. But how does everything like this make sure you're going into these next few times and use this as to set the tone for the future?
I mean, we have an incredible runway for soccer in this country. As you mentioned, we have the 26 Men's World Cup, hosting the 28 Olympics, and then we should be hosting the 2031 Women's World Cup. I'm pretty optimistic we're going to win it since we're the only bidders. So I like our chances. But, I mean, fast forward to 2031 and how much soccer will have changed in this country. As Don has mentioned, the valuations of clubs, both on the men's and women's side, are skyrocketing. We have every kid that has access to our game, and we have soccer in every school. So I think as we continue to grow both on the field and in the business of soccer, by 2031, 2032 will be a completely different view of U.S. soccer and soccer in the U.S.
Absolutely. Well, we're looking forward to it. Don, thanks so much. Cindy, thanks so much for being here.
Thank you.
Thanks, guys.
Please welcome to the stage Ryan McCormick, Senior Director, Factor and QQQ Equity Product Strategy at Invesco, for a conversation with Bloomberg's Christine Cook.
Hello, everybody. I am Christine Cook, not Ryan. I'm sure you all figured that out already. I'm happy to be here today, and I want to introduce Ryan, who's the Senior Director, Factor and QQQ Equity Product Strategy for Invesco, QQQ's Sponsor Spotlight today. We're going to talk about rethinking possibilities in college athletics. So welcome, Ryan. Good to see you again. Thank you for coming back and for continuing to support us. So just to kind of set the stage, can you, as a quick reminder, tell everybody what the QQQ is?
Yeah, no, I'm happy to. So Invesco QQQ is an ETF. It's an exchange-traded fund. It happens to be the 5th largest ETF in the world, and it tracks the NASDAQ 100 index, which is made up of the 100 largest companies listed on the NASDAQ exchange, ex-financials. So pretty much a number of different companies that you probably use every day, multiple times a day, very well-known companies. But it was launched 26 years ago, back in March of 1999, sort of like in the early stages of ETFs in the US. And so in that 26 years, I mean, at the time, it was a pretty novel technology, a pretty novel advancement in the world of asset management. And, you know, to see staying power of 26 years, like, it really has blossomed into this very widely known, very widely utilized ETF, and you know, a strategy that has brought, you know, the ability for investors to add growth into their portfolio in a very easy and efficient manner.
You say 99, I immediately think about Y2K, and it's like good that you made it past all of that and with all this longevity. Well, part of the growth is an investment in collegiate sports. Can you talk a little bit about your partnership with the NCAA and why that's important in your partnership portfolio?
Yeah, for sure. I mean, you know, I think in general, the question would probably be like, well, what is this guy doing at a sports conference, right? And I think, you know, we're the official ETF of the NCAA. We've had that partnership now for a couple of years. Alongside that, we're kind of the official financial literacy partner of the NCAA. We developed a program, How Not to Suck at Money. Originally, it was geared towards like the college athlete, but I mean, it's for anybody, right? It's for a college age student, it's for a high school age student, it's for a 30, a 40-year-old. Like, it really just emphasizes the basics of where do I start with investing, right? Or how do I tackle credit card debt? It's like very approachable questions to try to develop some level of education. And, you know, with that, that came in conjunction with our sponsorship of the NCAA. So I joked before in our lunch, you know, if you watch the NCAA basketball tournament, if you're watching March Madness, I mean, I challenge you to go 90 seconds without seeing an Invesco QQQ commercial. But it's a great opportunity for us to elevate our brand with, you know, a whole new set of potential investors, a whole new set of eyeballs, and, you know, just a very high-profile sponsorship that we're quite proud of.
When you think about financial literacy in that way and the commitment that you all have had, and like you said, it's a variety of age groups. Are there any trends that you see on programs that you all have invested more in there, or need states that have shown up that maybe you've had to pivot to address?
Yeah, you know, so we partner with a number of different schools, and I've been on the road and I've presented with, you know, alumni networks at, you know, pretty major universities, right? They'll tap a former athlete to come and talk about the importance of financial literacy, or you maybe a specific kind of financial question that they've been asked. I would say it's the most encouraging thing is like the appetite for education. Like these are packed rooms with college athletes with stuff a lot better to do than listen to me. But like they are all there showing up and asking very real questions about, you know, where do I start? What do I do in this scenario? And I think alongside like some of those alums, right, like they're drawn to those alumni. They've been in their shoes, they've been in that room, they've seen most of them a fair amount of success. and just the engagement is pretty spectacular. But I would say the one thing that I would really highlight is just like it's the appetite. These are this generation of kids, they want to learn, they want to capitalize on NIL, and I think the fact that there's so much education that is out there, not only through our financial literacy program, but I mean a number of them, it's affording these kids, these athletes, these students access to this information, and they're really taking to it.
Let's shift a little bit and talk about innovation. So earlier this afternoon, you sponsored a breakout session, Innovation and Investing in College Sports. Talk about what role innovation plays in powering a fund like Invesco QQQ and shaping kind of the future for college athletics.
Yeah, I think for Invesco QQQ, like we say that if you invest in QQQ, you're investing in innovation, right? And I think there's a few different layers to peel back on that onion. Like number one, the fact that this strategy was launched way back in '99, like as I said earlier, that in and of itself, that was a pretty innovative product. The ETF ecosystem was pretty innovative at that time. But we kind of look a little bit further because the companies that are in Invesco QQQ, like generally they seem to be able to stay ahead of the curve when it comes to changing consumer preferences, changing consumer trends. I mean, in this case, like wholesale or looking different, or the ability to stay nimble, where these companies look way different today than they did 3 years ago, 5 years ago, 10 years ago. And throughout that, they've been able to generate very real fundamental growth, right? They've been able to grow sales, they've been able to grow earnings, and that has fueled a halfway decent amount of performance. So that in and of itself is pretty innovative. And then you look at sort of the crossover between sports and some of these names, these technologically oriented names. It's no secret. I mean, any of the programming, I mean, everybody was talking about how technology somehow shapes sports. That could be the way that we consume as fans, the way we watch the game, what we have at our fingertips when we're watching the game, the options that we have. Certainly big data, analytics, right? If you look at preparedness, right? Film study, recovery. I mean, they need data in an effort to get any sort of edge on a competitor. And then you kind of take it a step further and you look at some of the companies. Well, a lot of these companies that are in this fund are these social media companies. And if you look at NIL and where you can monetize your name, your image, and likeness, I think immediately you get the gravitation over to kind of the world of social media. An easy way kind of get your foot in the door when it comes to NIL and promoting your own brand. So I think the intersection has only gotten kind of more entwined when you look at some of the names within the fund or technology in general and sports, right? It's revolutionizing the way that we consume, the way that athletes play, and the way that the game has evolved and grown over the past 20 years. And I feel like we're advancing at a pace that's much faster than at any point between now and 20 years ago.
Well, the other, back to school for all of us with kids in New York today, and the beginning of fall, which I refuse to say it's fall yet because I think we have at least 20 days more, or maybe 18. But college football is officially full swing, right? So let's do some lightning round on college football questions.
Okay.
We ready? All right, everybody. Favorite college football rivalry?
I mean, I love Notre Dame SC, but I will never say anything other than Army-Navy.
Oh, very nice. Tickets to the game or home fan cave?
I don't know if I'm in the minority on this, but tickets to the game, I feel like...
We get a show of hands. Who's fan cave at home? And live?
Oh, no.
Yes.
Wow, okay.
Live.
Proud. See, my friends are all like, no, I'm just going to sit in the basement and kind of relax, and I got my big screen or whatever. But no, you got to be there.
I love the idea of live. I think especially you talk about innovation, you talk about technology, you're hearing more and more people want the kind of experience of the game, which is very exciting. Okay, early season favorite to win the CFP?
My heart always says Notre Dame. But I mean,
we're sensing a trend.
I gotta stick with my heart. I mean, we got a free look last week. I mean, tough Miami team on the road, but I mean, Ohio State. Also, probably.
I think I probably know what the answer to this one. Bucket list stadium and/or game day atmosphere.
Well,
yeah, I know.
You know where I'm going. I mean, an LSU Tiger right here. I know some people were trying to sway
stadium.
my.
Do we have any other Tiger fans? I went to LSU. Anybody? Am I alone here? Okay, I'm alone. Best stadium.
They were trying to sway me before Penn State whiteout. I had a couple of folks trying to lob in, hey, throw this on. But again, I got to just stay with what I really want, and that would be LSU Death Valley night game.
Yes. Mount Rushmore of college football players, the 4 best players ever.
And I'm going to do best players, not Heisman's, not
Okay, yeah.
championships. Cam Newton, Herschel Walker, Bo Jackson, Vince Young.
Yes, I like that. Well, Ryan, thank you so much for joining us today and for Invesco QQQ sponsorship. Thank you all.
Thank you.
But admitting mistakes, and that's something we all make them. Tell us how you got to that, how you learned about that, and how to best deal with mistakes that you made.
Well, I think the number one area for me, Jason, is when time is of the essence, and that's in a game. You come to the sideline, something bad happened out on the field, we got to fix it. What's wrong? And the quickest way to fix it is if I can say, I messed that up. It's my fault. Everybody else keep doing what you're doing. I'll make the adjustment. It all takes care of it.
Yeah.
But if we all sit there and it's like, well, should I do this? Should I have done that? Should he have done something else? Well, sometimes you have to figure that out. Okay, you play a little bit wider, you play a little bit tighter, you get back up a little bit. Here's how we're going to handle that. But sometimes it's as simple as just, I screwed it up.
Yeah.
It's my fault. Keep doing what you're doing. We're fine. I'll make the adjustment. It won't happen again.
Is there a time that really sticks out in your mind when that happened?
Oh, multiples. And I've done it. It was a bad call. I called the wrong defense against the wrong personnel group.
Yeah.
It was a bad call. I'll never do that again.
Please welcome to the stage Alex Rodriguez and Bloomberg's Jason Kelly for a live taping of The Deal.
All right, buddy. So you know what's really funny that I just realized, I almost tripped over our microphones, is when I was watching that clip, I was like, leave it to me to produce this conference and then put on a clip where you don't even
I love it.
I mean,
that's well done. Well done.
Like, oh yeah, I interviewed Bill Belichick and this guy was here too. This is so exciting.
Very cool.
We love doing these live tapings because I can say stupid things and you can make me look good. We did it at Bloomberg Invest with Melody Hobson. I think we saw a clip of that earlier. Georgia Tech, we were down
with
there.
Your mom and your dad in the front row.
They were right there. Jess Gelman hosted us at the Sloan Analytics Conference. But this one's special because we're here in New York. You did some nice things in New York, by the way. Yeah.
And some not so nice things.
Yeah, fair enough. But we'll talk about most of the good things. When we were thinking about who we wanted to be here with us today, we're like, who embodies all of the things that our power players are the deal? You know, what are the brands that we might associate? We love brands. Giants, Notre Dame, and what's the name of that bank that's downtown?
Goldman Sachs.
Goldman Sachs, yes. So
Wharton Business School.
Wharton Business School. So there's one person. I think there's literally only one person who fits that, and he won a couple Super Bowls. We're going to talk about that. So please help us welcome, for this very special taping of The Deal, Justin Tuck. You can just come right through. I mean, like, you know, just act like it's an O-line.
I used to be an athlete.
Yeah.
Now Jace is the best athlete.
Yeah, clear. Well, I tripped on
Georgetown.
I tripped on the way out. So anyway, all right, pull it on in. Here we are. Last session of the day, no pressure. Thanks for being here.
Thanks for having me.
This is awesome. All right, take it away, champ.
So Justin, I've been such a big fan of yours, and you know, Jason was talking a little bit about, you know, some of the accomplishments you've had, some of your history, but you know, being a champion is one thing. Being a champion in New York is another. And I know that I was very fortunate to be part of one title in 2009 with the Yankees, and it's changed my life. It's changed my family, the trajectory of my business. You got 2 titles.
Yeah.
How has that impacted your life?
Listen, I think the first one was just surreal. You do it the first time, and again, it was very early in my career. I think that was year 3 in my career. And, you know, our friend Michael Strahan was the guy. So I was just in awe of, like, this whole, you know, process. And really didn't hit me until after the Super Bowl. So I didn't necessarily enjoy, like, the lead up to the Super Bowl because he was, you know, you just didn't know. But that second one, when I was the captain and I had the opportunity of seeing all the things in my life that had changed after we won the first one, and I got to enjoy the process of going through it. Whether that was the road trips, whether that was the media, whether that was, you know, I had a son at that time and he got the opportunity to experience it. That type of stuff is just life-changing. Not only of obviously being in New York and doing it, but just, you know, solidifying that, like, we did it again. That was just amazing.
So Jay, when we won in 2009, we
I was
had
there, by the way. Go Yankees.
Well, you were one of 30 or 35 million people that watched on TV. nothing like 150 million where you played. My question is it more enjoyment? Is it more anxiety? And when you win, is it more happiness or relief? 150, that's as big as it gets.
Yeah, I mean, like, I would be interested to hear your thought process on that, because to me, maybe it's just a God-given ability, but I just always looked at it like I'm playing in the backyard. This is a sport that I've played all my life. No matter if it's 2 people watching me or if it's 150 million, the X's and O's are still the X's and O's. I still have to defeat this blocker and go sack that quarterback. I still have to do this, that, and the third. So for me, in that moment, it didn't feel like anything other than me just playing the sport that I loved. Now, fast forward to all the things that came with it afterwards. That became more of the business side. That became more of I would say that was more anxiety driven than the actual game. The actual game for us was pretty simple. We practiced what we were going to go out there and do, and we had to go out there and perform, but we did that all our lives. I think the more anxiety driven was the things that came after or the things that were led before. But once that game started, once that coin was flipped and that kickoff happened, that was the easy part.
So I'm so glad you brought up Michael Strahan, because he's been a guest on the show, as you probably know. And one of the things he and Alex talked about, and I was just happy to be there, was this notion of winning in New York City. Yeah. And not just from a fan's perspective, but from a business perspective. That playing in New York City and then winning in New York City opened both of their eyes to this notion of what the world beyond football could be. You now work downtown, so I mean, it literally one of the iconic New York and global names in finance. How much did playing and then winning in New York influence what you did when you were done with football?
I would say a lot. I think every athlete in some regards wants to play in New York. Obviously, you got the Giants, you got the Yankees, you got the Knicks, you got very, very, very standout brands.
All the Jets fans are like,
I mean, you can't, I couldn't. But to that point, I think it takes a special individual to be able to succeed here. Yeah. Because, New York fans are relentless. They want a winner, and they want a winner today,
Alex
tomorrow.
thought they were easy. Yeah, they were really easy on him.
Yeah. But they want a winner today, tomorrow, and they don't care what you did last year. So to that point, winning here is special. Winning here exposes you to so many different things. I got exposed to so many things from a business standpoint, just the opportunity in New York, and then the people in New York that are huge fans of ours that truly want to be additive to what we wanted to do or what I wanted to do post my career. That I don't think you get the melting pot of New York or the melting pot like that any other place like New York.
Yeah.
And there's some pockets of other places, sure, but like New York is I think stands at the top of the mountain when it comes to like the opportunity outside of what we did on our sport that led, and like even from just growing my family up here and the opportunities from an education standpoint. I mean, like all that stuff is added in. So I have phenomenal relationships based off the fact that like I won in New York, and that obviously is boding well for what I do now.
Yeah.
So Justin, Notre Dame, then undergrad, then you go to business school at Wharton, then you win 2 titles with the Giants, and now you're at Goldman Sachs. I mean, it's blue chip everywhere.
Yeah.
But take me back. I remember when I was 10 years old, it was the first time that I had a vision for what I wanted my life to be, and I called it the 2 Bs. I was sitting there in New York City, Washington Heights with my father, watching the Yankees, the Mets, and it was at that point that I wanted the 2 Bs, baseball and business. I was driven for those 2 things. When did you first start thinking about business, and which one's harder, business or being a Giant?
Yeah, I mean, listen, I grew up on a pig farm in Kelton, Alabama. There's probably more people in this room than it is in Kelton, Alabama.
I was gonna say, if you were waiting for like Kelton, Alabama.
Oh no.
They're not here.
I'll take Alabama.
Yeah, exactly. Alabama, anyone.
No.
Yeah.
See, so for me, I think the only thing I thought about was from a sports perspective is how do I utilize football to provide a phenomenal education that my parents can't afford. You know, my mom and dad was not going to be able to send me to Notre Dame. My mom and dad was not going to be able to send me to Wharton. But I knew if I did what I needed to do on the football field, and I played basketball and baseball, just so happened I like to hit people more than I like to hit a baseball. I knew that was going to afford me the opportunity to go other places. And so, like, for me, I never thought about anything other than, hey, play a great football, get a great education. The time when I started to think about all the other ancillary things that could come off of this, I'm talking to my cousin at the time, and this is my rookie year in the league, and he said something to me that he had probably heard from someone else, and this is somewhat of a known phrase now, but like he said, the NFL stands for not for long. And I just started thinking about, all right, if I'm blessed to play 4 years, even if I'm blessed to play 10, I came to the league when I was 21 years old, I'd be 31 when I retired. What am I gonna do then? And so I started thinking about that and started really making relationships with people. I tell all of my friends that play in leagues now, I'm like, listen, if you have aspirations about doing anything outside of your sport or inside of your sport, but just on the business side of it, make these relationships now while you're hot. Don't wait till you're the 12th year in and you're just hanging on and you're trying to go into some private equity owner or some hedge fund founder and say, hey, I'm XYZ, I play. No, do that stuff now while you're hot, while you're winning Super Bowls or you're playing in All-Star games. And then they can be a part of your journey, right? I had so many guys that were part of my journey of taking young Justin Tuck to think about going to Wharton, think about going to Goldman Sachs, think about investing in XYZ. Whereas if I was left to my own advices there, which is fine, I'll probably be back on a farm somewhere in Alabama, which I love to do, but I probably wouldn't be doing this if I didn't have those relationships prior to lead me to what the opportunities could be.
Well, and it's interesting too to think about what your playbook was, because there are, and as there often are on this show, like echoes to you. Alex has talked about how he would literally like go in his cleats and into Jerry Reinsdorf's office or other owners. My understanding is you were literally like working the suites at Giant Stadium, right? Yeah. Is that fair?
I don't know.
When I say working, I mean networking.
Yeah, for sure. I don't know if it's even legal for me to get this information, to be honest with you. But I had a phenomenal relationship with the Giants, their ownership, and people that work. And I was just like, man, who owns that? Who is it? And most of the time they would know, that guy, he runs XYZ Financial Services, or this guy, his family owns, this real estate group, whatever it looks like. And like over time, I was just like, I just had a good game. It's Monday. I'm not doing anything. I should be making relationships. So I started talking to our staff about, hey, is there anybody I should be talking to? So I got names of people who own the suites and started just reaching out to them and just, doing a coffee chat or dinner or lunch or whatever it looked like. And I didn't want anything. I didn't go in and say, hey, can you help me here? I was interested in how they got to where they got to. What are some things that you can tell me about your story or your process or your journey that if I decide to go this route, because I don't believe in reinventing the wheel. I think people have come before all of us that have done things that we would like to do. So just learn from them and try not to make the same mistakes they made. So that was the premise. And then again, over time, they got to see me for 8-9 years in the journey of Justin Tuck. And now I'm at Goldman Sachs, and you better believe I'm calling those people and being like, hey. So that part of it was phenomenal in my transition. Because I tell people all the time, transition, if you're thinking about transitioning from something, make it a long transition. Don't try to just transition. Because if you think about, look at me in football. I didn't become a Pro Bowl football player until I was 24 years old. Think about how long I played football to get to that point. So if I'm transitioning into finance, why do I think I'm going to go from being a highly touted football player or athlete and go right into the next transition as that highly touted person in finance or person in real estate or person in whatever it is you're doing? No. You need to get back to being the Pop Warner person over here and go through that process of learning all the ancillary things that's going to make you that Pro Bowl caliber or that All-Star caliber businessman, and not think that our ego is so great that we got to go from here to here. Mm-hmm. That's not realistic.
So Jay, you mentioned, first of all, you're at Goldman Sachs now. You started in 2018. You had a little internship in 2017 to kind of set you up with that. Now, you're building teams at Goldman Sachs. Kind of the same things you were doing with Giants. You mentioned you were the captain of the team, right? What lessons and how has that mindset translated to the world of business?
Yeah, I think if I think about things that I would do on a daily basis as the captain of a football team, and now as a managing director of leading teams at Goldman, it's very simple, to be honest with you. Like, invest in the people around you. In football, it looks different. It might be, hey, I'm bringing this rookie and his family into our house and cooking him a meal and making sure I learn everything there is to know about him, his story, his wife, his kids, et cetera, et cetera. And I use that on football fields too. I mean, 4th and 1, and we need to make a stop. I know exactly what triggers this person. I know exactly what his motivations is. I know exactly what's going to get him so hyped for this moment. Right, in the 4th quarter, and we need to get a stop to win a Super Bowl. And we're tired, and guys I know exactly how to point those, the right things. I knew which guy liked for me to curse him out on the football field. I knew what guy needed to pull to the side and pat him on his back and say, man, it's okay, you're doing this right? Keep doing what you're doing. I knew exactly how to finagle that. And the same thing in the business and my teams at Goldman. I know exactly how to position our team, and again, as we bring on new people, you got to learn it. But I know exactly how to position them, what clients they need to be paired with, and which ones the synergies are right for this person to be paired with that client, et cetera, et cetera. And that's, I think, it's simple. If you pay attention to people, if you take an ownership in knowing what your team looks like and what really moves the needle for them, it allows you to make the right decisions around a lot of different things in the business.
And so from a business perspective, as Alex alluded to, you were blending, and as you have described to us, you were blending this early, your interest in business, but you also had to think about your business as a football player.
Yeah.
How did you think about that? And I know Alex had this experience of getting smarter about the world of baseball and negotiations and all of that. How did you do that, and how did you think about your deal making as a player?
Yeah, I think back to your point about when you win, you get more opportunities. You get opportunity to sit in some of these rooms that when I was a rookie, the contract was a contract. It was, you trusted your agent to do the right things for you and get the best outcome for you. As you got older and you had more success, you could dictate a little bit more. Right, and you could tell your agent, hey, I want to play for this team, or I don't want to play for that team. I like this, And then, like, with the relationships I had with the Mayer family and the Tisch family and the GMs, I could talk about things around like, hey, here's where I think I'm weak, we're weak. Here's where I think I can get stronger, and et cetera, et cetera. Here's where I think the team could get stronger. And they listened to it. They didn't listen to me to the point where it was like, we're going to just go out and like, hey, Justin, give us a list of players. But they listened to us from the perspective that they knew like at the time after Stray left, it was me and Eli's team. So they knew that we owned that locker room.
Eli Manning, we are discussing.
That guy.
For those of you not on a first name basis, it's
Eliza
Eli
Manning.
Yeah.
Yeah, so we owned the locker room. That locker room was our place, and we didn't allow nonsense in it. But to that point, we knew the players. We knew because we were just an extension of Coach Coughlin, right? And we knew how to navigate that locker room in a way that we could go back in the offseason and say, hey, here's where we're strong, here's where we're weak. That was the start of kind of like my deal making or negotiations with when I was thinking about contracts at a later point.
That sounds familiar. I mean, like, because I remember we had Jerry Cardinal in the show, and you and he talking about, character. To say that's a good episode for
former Goldman.
Former Goldman, now head of Redbird Capital. He owns Paramount. I mean, he's doing some things.
He's done well.
He's done okay for himself. But you guys talked on that episode about mapping out talking about the lineup for the Yankees. But you had to have some credibility, right, in the room in order for them, to Justin's point, to listen to you.
Yeah, I mean, by that time, you're 15 years in the league. You build a certain amount of credibility with your knowledge, the way you study the game, the way you know people as humans first, not just talent, because talent doesn't win championships. Teams win championships.
100.
And that's exactly what we had in 2009. And when you look back at that team, and we're on these group texts, and we're all like, once you win a title, you're family forever. And every single one of those guys are great family guys, and they're great fathers. And you need more than just talent. You need great people, because this stuff's hard.
Yeah.
You play 16, 17 games. We play 162, 200 if you in 232 days, 200 and 232 if you include spring training and you go all the way to the World Series. So it is not for the weak of heart.
And I'm just laughing, because right before we walked on here, I'm getting text messages from those group chats.
Oh, is that right?
Those group chats of guys who, whether that be O.C. Ewing, who's now in London, or Dave Tollefson, who's in Oklahoma, Nebraska, or Barry Cofield, who's in Dallas Tech. All of us are still really, really close, because to your point, when you win a championship, you go through so many ups and downs, the volatility that can happen in a 162, 200-plus games in a 17-week regular season, then 4 playoff games. The volatility that can happen throughout those seasons, the ups and downs of that season, you really, really forge phenomenal lasting relationships.
Jay, and I think the through line, the through line is that it's not just the Harvard, Yale, the smartest, or the guy that throws the fastest, or the guy that hits it the furthest. It takes real people with real DNA that put team first, and we say we, not I. And the same goes for the Yankees and the Giants, same goes for Goldman Sachs or business.
Sure.
It's more than just talent.
And so, one of the things that we've obviously touched on, but I want to sit for a minute with is, you do it, talk about deals, you do a deal, one-day contracts, you can retire as a Giant, great move. And then you decide to go to business school. That's a big decision. Then you decide to go work for Goldman Sachs. That's not the conventional, I mean, I sort of said it when we were talking about you. When you list the sort of places you've been, I think you're one of one. And so why did you make those decisions? Why did you decide to go to school, and then why did you decide to go to Goldman?
The decision to go to school was probably, it's a lot of decisions there, but it was probably because I wanted to learn how to be a better steward of the gifts and the talents and the resources God had given me. Again, growing up where I grew up, not a lot of people get the opportunities that I had, and I didn't want to squander those opportunities. So me going back to business school was to get smarter about, honestly, just managing my own opportunities. Now that morphed into a lot more, but that was the infancy of the idea.
You wanted to know more about how to run the business of Justin.
Absolutely, because I was getting inbounds from all different opportunities, right? Whether that be on the real estate side, whether that be going into media. I dabbled in that for a little bit, and then also on the financial side. So I wanted to learn more about that. And what was the other part of the question?
The other part is, so you get out of business school, and
Goldman. Yeah.
I mean, you're like, that place that I work.
Yeah, that place.
But because, and just to give you some context, you could have JTC, you could have A-Ride Corp,
Thought about it.
Yeah, exactly. But you didn't. And so what's the?
I hope you're Goldman Sachs. They just wouldn't allow me in.
Alex is like, not an option.
Or Notre Dame or Wharton.
So I guess I'm going to give you a little bit more synopsis of who I am and how I grew up and what's important to me. Goldman, honestly, was because my grandfather used to say something to me that stuck. To this day, I use it often. He goes, if you're not at the table, you're on the menu. And what he meant by that was there's so many cases in history where decisions have been made for us. And so, like, when I think about the relationships and the conversations I had in those locker rooms and the advice I had to give kids, and I say kids, rookies and younger players about how to navigate New York City, whether that was from on the field, off the field situation. When I was really thinking about what I wanted to do, I started to really think about, how do I represent us at the highest of my ability? And I couldn't think of any other place that gave me an opportunity to be in these rooms and be a part of these decision-making deals than in a place like Goldman Sachs. And I get the opportunity to talk to, a lot of our partners of the firm, obviously David and John, who are doing an absolutely phenomenal job.
David Solomon and John Waldron, again.
I think they know.
This guy. I mean,
No,
like the first names. I mean,
I still call them Mr. and Mr. and Mr. But they don't like that, so I call them David and John. But I get the opportunity to see that, and the thing that I always tell my team is I don't really care about owning a bigger piece of the pie. I care about making the pie bigger. So yeah, that's what wakes me up in the morning, and I think that's what drives me to continue to be successful. It's not necessarily for Justin Tuck. Justin Tuck and Lauren Tuck and Jason, Jonah Tuck, my two sons, are fine. But how do I at least give it a shot to take the opportunities that God has given me and make that a broader play? That's why Goldman.
Platform,
100%.
So Justin, when you think about when you were a rookie, and in recent news, you saw there was an investor that came in for a 10% piece for the Giants at $10 billion. When you were a rookie, it was probably 1, 2, or 3. It's probably 4x, 5x, 7x.
Yeah.
Couple questions there. What do you think is the best investment in sports? And what do you make of this whole thing? Where does it stop? Where does it go?
Yeah.
What are your thoughts?
Listen, I think Roger Goodell and team are doing.
You're a quick study. I love it. That's
they're doing absolutely.
You should do it. See, you're like, I could do media, and it's like, yeah, he could do media.
Listen, Jason, I'll give you another tip one about me. I listen loudly. But I think Roger's doing a phenomenal job, and it would be hard pressed to think that there's an investment in sports better than the NFL. Obviously, I'm biased. There's a lot of people who represent a lot of sports leagues and sports franchises out there that would argue that, and I would take that argument. But again, where does it stop? I don't know if it does. If you think about where media rights are going, and now private equity money coming in, and the consolidation around, media, et cetera, I'm not smart enough to know where it stops. I'm not betting on it. I think it is a popular game that's getting more popular. The expansion into London, probably Asia, Mexico, Brazil, et cetera. I mean, it's a nice game alone.
I guess a better question is, if you were the championship year in your second or third year, right?
Yeah.
If somebody told you the Giants would be worth $10 billion in 2025, would you have said true or false?
I probably would have said false.
Yeah.
Yeah, I probably definitely would have said false.
How about
I mean, all right, let me give you another one. Another person you had on your podcast, Mr. Blitzer. I mean, think about what they could sell the Commanders for today.
Yeah.
Versus what they just bought it for.
They bought it for $6 billion and change.
Yeah, I guarantee you, I don't know exactly what they would buy, but now seeing what the Giants just got valued at, what the Lakers got valued, it's only going up. So it'd be interesting to see as we sit here today in 2025, in 2035, where this goes. But I have no reason to think that it might have a slowing down power, but I don't think it has a stopping power.
Jace, I know you remember this, but I know you have a question, but I remember when Roger Goodell like 10 years ago said, I want to get the revenues to over 20 billion to 25 billion, and everyone laughed at them, and they're on their way.
Yeah.
I mean, they're here.
Well, because to your point, and you alluded to this, Justin, I mean, they're in a position where they can opt out of their current media deal and renegotiate it, and whoever is going to do that is going to pay a very handsome price. You know, you alluded to something, Justin, you mentioned it, private equity coming in. You know, I had a conversation earlier today with Tom Garfinkel and Mike Arougheti about Ares' investment in the Dolphins. You know, you are, through your studies and now through your day-to-day work, very familiar with the power of institutional capital. How does that change the business of sports in your estimation? You know, we went through this period where David Blitzer and Josh Harris and Mark Lazary, et cetera, were making personal investments. Now it's fund investments. How does that alter the landscape, especially for people in this room who are thinking about investing in sports?
I mean, listen, I think it alters a lot of different ways. I think I'll give you one. I think if you, hate to say names, but think about what Sixth Street is doing.
Yeah.
If you think about what they've done with San Antonio, you know, I think the Giants now, San Francisco, one big one I'm missing. Celtics.
Yeah.
Right, you clean up cap tables.
Even Bay FC.
That's another one, right?
Yeah.
So like, when you bring in that much capital in and being able to do a lot of different things, I think the movement in sports investing is going to be very interesting. I'm not smart enough to know exactly how that's going to, but like, I mean, I don't think it's going to stop. I think you're only going to see more others get involved in it. And like, just going back to the Giants deal, right? You think about, you know, that valuation with no control, no path to ownership. What's stopping the next owners from doing that? Like, there's a lot of different issues that I have to deal with on a daily basis for clients, whether that's estate issues, you know, tax issues, et cetera. But like, I just feel like we're at the cusp of this, and it's going to start to happen in not only the major sports leagues, but also some of the smaller ones too, where, you know, valuations are getting so high. What individual can afford these teams? Right, and as families like the Mara and Tisch family look for liquidity, I think the next option is private equity. I don't see in the near term Saudi money coming in, so I think the only next thing is private
Jason, as we thinking about the future, the question that I would think about is, you know, what would an investor pay for Notre Dame football?
Yeah.
You know, I read recently where Ohio State football does about $150 million of top line, and they're valued somewhere around $2.3 billion. And I'm just thinking, like, what world are we in, and how fast is it moving?
But you know as well as I know, right? Sometimes this is just a play of like, forget the numbers. I just want to own this asset. So a lot of times that can get outrageous. I remember when Ballmer bought the Clippers at, you know, what was it, $2 billion?
$2 billion.
And now everybody was like,
you were like, you're
crazy?
Insane.
And
crazy
now,
yeah.
I mean, like, so I think, yeah, who knows, right? We are all up here, you know, speculating on where it can go, but we also know, like, based on the track record of where it has been in the last, let's call it 10 years, it's going to continue to grow.
No, go ahead.
Well, I just had a question. Like, I'm actually wondering, from your point of view, is if you were investing dollars right now, what is the best, you know, bang for your buck? What league would you invest in?
You know, I can't give you advice.
So let me ask you a different question, which is, what do you think? See, I bailed you out.
Smart.
I'm a loud listener too. I'm a quiet listener. I didn't play professional sports. But when you think about the college game, I mean, you know, we watched, you know, you watched with much more vested interest. I watched just as a college football fan, Notre Dame play University of Miami the other night. Sorry.
It's okay.
I mean, good job.
Alex is very happy right now.
But that was a phenomenal game, in part because of everything that was on display, including the transfer portal, NIL money, all of those things. These are the things that didn't exist when you went to one of the premier, you would probably say the premier, college football programs in the country. How much is that, when you look at that through the Wharton Goldman, Justin Tuck lens, what do you make of college sports these days?
Listen, I just wish I was 18-year-old, 17-year-old kid. In some cases, 16-year-old kid. Like they're going. It's even diving into college. I mean, in high school.
High school, yeah.
Right. So like, I definitely think these athletes deserve to get paid because for those who wasn't a college athlete, there's not much else for you to do. The program is so demanding on your time, and for good reason, right? They're giving you a phenomenal education most places. And you get an opportunity to play the sport you love basically for free. But like outside of that, like how do I, like my biggest issue before NIL was like, how do I even enjoy going out, getting an opportunity to take my girlfriend to the movies and get a big popcorn? I don't have any other way of making capital. I didn't have any income coming in. So like to be honest with you, I didn't get the opportunity to really, really engage with the student body as much as I would have if I had a few dollars in my pocket, right? And who knew that these athletes are going to be making millions in college?
Yeah, it's more than a few dollars in their pocket
not a few
now.
more.
Yeah.
I definitely think they deserve to get paid. I just hope that this thing gets some structure around it before it really, really gets out of control, and maybe it's already out of control. But to your point, NIL, if did right, can be so phenomenal for the bigger sports. My fear is some of these Olympic sports, these sports that will give us gold medals in the next Olympics, might get somewhat, because I think athletic directors, board of trustees are going to have to make a decision around how they allocate these capitals, and typically those go to the more revenue-producing sports.
Yep. Yeah. We heard that earlier. I mean, we had people on this stage.
You had experts telling you the lamest terms of what I just said. Yeah, absolutely.
And in the sense, the athletic director is essentially saying, we're going to have fewer Olympic medals. Like, the U.S. is going to lose more Olympic. I mean, that's crazy to think about, and it's clearly an unintended consequence.
Well, Justin, to go back to what you said, I'll never forget when, the Fab Five, going back to the Michigan days, and Weber, creating all type of, revenue for the school.
Are you just going to talk about every rival?
Well, yeah, kind of. Well, my daughter goes there.
Hey, man, listen, I was a Fab Five fan, so
But Justin, the fact that he would look and his jersey would be up there for a couple $100s, and he couldn't afford a burger at McDonald's. Yeah. But I think what's important to remember about, the game we're talking about, Catholics versus Convicts, that was a great series on 30 for 30. Almost 13
Only
million.
Someone from Miami can actually say it out loud, but yeah, go ahead.
In a weird way, we're proud of it. It's kind of sad.
I'm probably more
No, but I think what's important about that night on ABC, you had almost 13 million people watching. And what other event, what other programming besides the NFL can attract that type of audience in a world that people don't watch television anymore? I know my kids don't, probably your kids don't watch too much TV. So where is this going? Who knows?
Yeah.
Yeah, I think to your point though, if you want to think about it, right, that's the only thing that probably AI is not going to just disrupt live sporting events, right? So I think it's just the appetite for that will only grow stronger, right? I just don't see it. I don't see it being minimized. I think as these leagues continue to have phenomenal athletes, whether that's football, baseball, basketball, et cetera, the live, real, non-correlated opportunity to have a sport and two oppositions going against each other where you can't script it. You can't say, hey, the Yankees are going to beat the Red Sox by 5 runs. Go Yankees again. That's real. So I just feel like that is going to continue to grow in the minds of people and the things that they want to desire from a content standpoint, which also leads back to previous conversations we had about, does this thing continue to monetize itself? Yep. I just don't see how it doesn't.
Yeah.
Hurry up offense, 2-minute drill.
There you go. All right, so in our remaining couple minutes, we're going to do our rapid fire that we do on every episode of The Deal. We have a bonus question. It's usually 10. We have a bonus question, though. It's pure pandering to the audience, I think, but you'll see when it gets here. So we're going to bounce it back and forth. Are you ready? Just keep it tight. First thing that comes to your mind.
Sure.
All right. Yeah. You seem enthusiastic.
These never go well.
What's one word to describe your deal-making style?
Truthful.
What's more important to you, data or gut?
I would say gut that has been fed the right data.
There you go.
Who's your dream deal-making partner?
I don't really have a dream person, but I mean, Alex Rodriguez.
Oh boy!
All right, I love it. Jason loves that one.
I know.
No, what's the best piece of advice you ever received on deal making or business?
If you tell the truth, it's easy to remember.
What's the worst advice you've been given?
You're special.
What is your hype song?
There's a story behind that, by the way. What's my hype song?
What's your hype song before a big meeting or negotiation?
Phil Collins in the air tonight.
Ooh, the drum solo?
Yeah.
There you go. You started a literacy nonprofit called Rush with your wife, Lauren. What's your favorite book?
Wow. I'm going to give a shot to a friend of mine. I love reading The Other Westmore.
Ooh,
okay.
Really good.
If you can only watch one sport for the rest of your life, which one is it?
Y'all gonna be surprised by this one, and it's not even about me, it's about my wife. Because if I had to watch another sport, I want her right beside me. So she loves tennis, so I would watch tennis.
Oh, there you go.
Oh,
very
teddy bear.
sweet answer.
Smart.
Yeah.
She's gonna see this.
You're not gonna make us cry.
What team do you want to see win a championship more than any?
Notre Dame Fighting Irish football program. Just to be very clear.
Just in case anyone doubted who we were talking about.
All right, what's your advice for someone who wants a career just like yours?
Do the work. No shortcuts in this. Do the work.
All right, and this is the bonus 11th question.
For the crowd.
For the crowd. Please give us an optimistic outlook for the New York Football Giants.
I thought you said rapid fire. I can't.
How they gonna do?
We've upgraded in just about every position. So if we stay healthy, I think we're gonna have a much better, season. But that being said, we have the hardest schedule in the NFL. Thanks, Roger Goodell and team. But yeah, I'm optimistic with the fact that we have a phenomenal defense. We have a proven quarterback. We have a young stud at quarterback that seems to get it. I think we've upgraded our O-line. We have a young running back that's coming back for a second year, and he'll only be better. So to the football guys, if we can stay healthy, I'm really optimistic.
It's a great synopsis, but I need a record.
I am going to say 9-8.
All right. And the Jets?
I don't work for it. However, I like the Jets, though. I mean, listen, it's good for football to have those two teams be good.
Yeah.
But I mean, outside of Justin Fields, I don't think I can name like 5 other players on the Jets. But honestly, Quinn Williams, my guy. Outside of that, man, I wish you luck. As long as you don't play my Giants, I wish you luck. So.
All right. Well, and on that note, go Irish.
Go Irish.
All right. Thank you, Justin, so much.
Guys.
Fun. That was really good.
All right, and with that, as these guys, you guys can exit, and we'll see you backstage. With that, we're done. Thank you so much for a phenomenal day. I want to thank our sponsor, Invesco QQQ. If you want to watch this back, it'll be available on BloombergLive.com, excuse me. And if you want that 3-month free subscription to see all of our great content, including the Bloomberg Business of Sports newsletter, please sign up. Use the QR code. Snacks and drinks outside. We loved having you here. Have a great rest of your week. And enjoy the Open and this great sports calendar. Thank you so much. Thank you.